already see companies with heavy share buybacks. They are the one that's lagging. We should point out all of this, Jonathan, though, is that this is going to potentially get very political. When this note was written, buybacks was a hot topic in D.C. Senators were after them. The fact that we have the stimulus packages coming, the coronavirus stimulus package may hit some of these corporates, and this can potentially come another big debate in Congress. Bloomberg Intelligence says they don't expect the Fed to institute a blanket ban on bank dividends, something that we're seeing happening over in Europe. But Congress, Jonathan, that could still be a threat.
Bloomberg's Anne-Marie with the latest. Anne-Marie, thank you. And just for our audience at home, we are grappling with some real technical issues. I can't hear my control room, so I'm not sure where we are in the programme at any given time. Bear with me. I'll do my best to guide you through the programme as and when I can. I do understand that Kathy Jones, a good friend of this programme, joins us now. She joins us from Charles Schwab. Kathy, companies raising money at an unprecedented rate through Q1. What interests me is what that money is being used for. Typically, over the last few years, if we had a big bout of issuance, it was used for things like buybacks, M&A. This time around, it's a whole lot more defensive, Kathy.
Yeah, absolutely. I mean, given everything that's going on with the sudden stop in economic activity, big drop in demand, companies are trying to shore up their balance sheets, which have been really leveraged for the last couple of years. They're trying to shore up those balance sheets to give them a buffer as we go into what looks like an extended period of very weak growth, deep recession. And there's no real timeline in terms of where we come out on the other side. So I think they're trying very hard to be defensive and get some cash on hand so that they can weather the storm.
Kathy, pretty much everyone I've spoken to in the credit markets, portfolio managers, fixed income investors have said a similar thing, that the biggest dislocations we saw were in investment grade. High grade credits getting smacked around by people who were forced to sell. And the biggest opportunities over the last few weeks have been right there in IG, in the high grade space as the Fed has stepped back in. Has that been a story for you too, Kathy?
Yeah, and as you know, John, we hadn't liked high yield for quite some time, and then, of course, spreads moved way out. On the investment grade side, though, we are looking at this as an opportunity, if you stay single A or above, to take advantage of the widening of spreads. Spreads have been so narrow for so long, there really wasn't a great opportunity, particularly with the leveraging of balance sheets and the lowering of the downgrades into triple B. But now, we do have the Fed in there trying to intermediate to make sure that companies have access to capital. And I guess if the Fed is buying corporate bonds, and on the investment grade side, it makes us feel a lot more confident at these levels that we can find some opportunities there.
Kathy, undeniably, things are better now than they were 2 weeks ago in fixed income, particularly in the high-grade part of credit markets and investment grade. But the thing I'm hearing repeatedly over the course of the last few days from many people who have been part of that trade, looking for those dislocations in investment grade to close, is that the improvement in credit shouldn't be taken as a green light to add risk more broadly. Is that the message that you'd be giving today as well?
Oh, yeah, absolutely, absolutely.
We don't see this
as a green light that,
all
is
for 2
well
days already.
again and you should
Today
add
be the
risk
third
to the
day.
portfolio. Our view is that you should be fairly defensive still. Moving up in credit quality continues to be something we've advocated for quite some time and still advocate, which is why we like single A and above. I think that the big difference for us is if you look back at the beginning of the year,
3 days,
last year, there really wasn't any risk premium embedded in the market to compensate you for credit risk. And now we do have a fairly sizable cushion or,
but I've been in this trade for 3 days already.
Premium in there, and that makes it a whole
3 days
different equation.
from the USA
but
time
this is
zone.
not go out and buy everything risky. We're still avoiding, bank loans. We're still really cautious on things like emerging markets. We generally have a pretty cautious tone.
Kathy, typically, you and I would have a conversation around the turn of a new quarter, and we discussed the things we
Just
learned in the
pretty
previous
good.
quarter and how we'd apply them for the year ahead. I'm just wondering, Kathy, we've learned so much in the last couple of weeks. What's the one lesson that you think we all need to take away and apply to this market we're in right now?
You know, I would say the value of liquidity. People don't generally, when times are good, they don't really think about the value of liquidity in a portfolio. And then when something happens like this, all of a sudden liquidity is scarce, and you have to pay a high price for it. So
I think this
I guess
one I
the
took
two
out.
things
I
are,
don't
you know,
remember.
liquidity, diversification. I would add that
Yeah,
in
I
as
did. I
well.
should've just left it
But
in
really,
there. It's all
you know,
good.
liquidity is really important.
Kathy Jones of Charles Schwab. Kathy, always appreciate your time. Thanks for giving it to us a little bit early
I'm
this
not
morning.
in Carnival
and
yet.
through this program. Kathy Jones there of Charles Schwab weighing in on
buy
the
a
credit
stop
markets.
order
Coming up on this program,
for,
we'll be catching up with Matt Hornback of
$10.
Morgan Stanley about
Supposed
the
to hit
huge amount of
$10. I'm
issuance we're
hopping right on
expected to
in
get in the Treasury market and the huge amount of demand coming
The
from
lowest
one
at it
place, the Federal
then
Reserve.
was,
From New York this morning, good morning. This is Bloomberg
8.
TV.
So I think when I hit 10, I'm gonna buy some. And then if it do drop down to like 7, I'm gonna buy some more. News is going on right now. Every time news comes on, the market goes the opposite way every single time. Every single time, man.
Cryptocurrency is changing the way people interact with their money. It lets you be your own bank without paying ridiculous and unnecessary fees. The problem is that the stores you shop at don't accept crypto, but Blockcard solves that. It's the best way to buy whatever you want at over 50 million merchants globally using your cryptocurrency. In just 5 minutes, you can sign up, deposit funds, and instantly get access to your virtual card. We'll mail you a physical card too. No transaction fees.
Or two, and then takes it down quite a bit. So in the very short term, the central banks...
Meet Tony. Tony has a good job where he works during the day, but he's always dreamed of owning
this market, and it has been absolutely massive. Last week, the Fed's balance sheet expanded by $600 billion. And a friend of mine, the former Nomura credit strategist, fixed income strategist, rate strategist, George Concalves, pointed out that $600 billion, not quite apples and apples here, granted, but $600 billion was the equivalent expansion under QE2 coming out of the financial crisis at the Fed. And it was all done in the space of a week. That's just how much the Federal Reserve has been doing in this market in a very short amount of time. To weigh in on that, I'm pleased to say Matt Hornback of Morgan Stanley joins us now on the program. Matt, always great to get your thoughts on this show. Let me ask you a question that's been on my mind the last couple of weeks. Just how big is this balance sheet of the Fed going to be by the time we end 2020?
Yeah, I mean, John, it is going to be a lot larger than it is today. Let me give you some perspective. When we looked at this problem to try to figure out how big the Fed's balance sheet would have to become, we ultimately reverted to our financial conditions framework, which is what we think ultimately dictates behavior from the Fed over a medium to long-term time frame. And what we're seeing in this framework is that the Fed is going to have to increase the size of its balance sheet such that it puts enough downward pressure on real interest rates, shadow short-term interest rates, to effectively equivalent to a 300 basis point rate cut. How much balance sheet expansion is that, John? We're talking about $4 to $5 trillion of balance sheet expansion when all is said and done. Not all of that, of course, is going to come this year, and not all of that will be in U.S. Treasury securities. But on our numbers, we're talking about $3 trillion worth of Treasury purchases over the course of the coming year or so.
Matt, just in terms of the maturity profile of those Treasury purchases, are they going to be really, really short duration Treasuries right at the front end that will roll off as quickly as they come back on? Or are these things that will be reinvested over time, longer dated maturities that will sit on the balance sheet for quite a while? How are you thinking about that kind of dynamic?
Yeah, so the way in which we're thinking about that, John, is that the Fed basically has two goals that are overlapping in a sense. One of the goals with their purchases today is to restore market functionality and liquidity, and that is a goal that they're clearly having some success in achieving. But then at some point, they're going to have to transition to their other goal, which is to ease financial conditions more broadly. We think that the current purchases focusing on market structure and liquidity, which have been focused on the front end, is exactly the right strategy for the Fed to pursue. But as they start to pivot more towards a financial conditions framework, we ultimately believe that they will start to extend the maturity of those purchases out the yield curve. We're not talking about a maturity extension program or any kind of an Operation Twist, if you will, but we are talking about the Fed starting to buy longer dated securities as they are reducing the pace at which they are adding securities to their balance sheet every week.
Yep,
Matt, it's terribly difficult to make any kind of market call with such limited visibility on the economy and the outlook for growth, for inflation. But is there a market call, a yield curve call that you would associate with what you see happening with the Fed's balance sheet?
Yeah, John, we are expecting the curve to end up flatter than it is right now. Again, we are seeing the yield curve behave in a fairly directional way, where it is flattening as yields fall and it is steepening as yields rise. This, of course, makes sense just given how pinned short-term interest rates are to the effective lower bound. But ultimately, what we're dealing with here is a timing mismatch. The purchases that the Fed are implementing are occurring today at an extremely fast pace. The supply that we are expecting to come from the U.S. Treasury initially will be concentrated in T-bills. We are expecting about $1 trillion worth of T-bill issuance over the course of the next couple of months. And this year, we are expecting T-bill issuance to surpass $2 trillion. Eventually, of course, that issuance will be pushed further out the yield curve as the Treasury is able to increase its coupon offerings to the marketplace. And when they do that, we think that they will ultimately have the same playbook that they used in 2018, where they increase coupon sizes mostly in the 2 to 7 year sector. Of course, coupons are going to go up across the curve, John. As the Treasury Secretary suggested a couple of weeks back, we are going to have more 30-year bonds hit the marketplace. And of course we are, because we're going to have a lot more of everything hit the market over the course of the coming couple of years. But we think that the majority of that issuance is going to occur in the 2 to 7 year sector. And so when we combine our view on what the Fed will end up doing and our view on how Treasury will end up financing these deficits, we ultimately think that does end up putting flattening pressure on the Treasury curve.
Matt, that's the yield curve call. Let's just wrap things up with a quick call on the economy. I've spent a lot of time reading over the research at Morgan Stanley, and I have to say the economics team has done a tremendous job staying on top of the high-frequency data. Ellen Zentner, your colleague, absolutely almost spot on what happened with claims last week. I know the focus this week will be on claims once again. It comes out tomorrow. What are you guys looking for, Matt?
Yeah, John, we're looking for another record claims number. So in the context of 4 million, it sort of boggles the mind how quickly jobs have been lost in the United States. But we are looking for another record number, John. And ultimately, our view is that the second quarter, which is the quarter that has literally just begun today, is ultimately going to be the trough quarter for the U.S. economy. But even though we are going to be troughing in the second quarter, and even though we are going to be getting a very nice stimulus package hitting the economy, we still don't see the economy getting back to its former self until 2021, John. And so ultimately, all of this stimulus is very valuable. It's very helpful. And we are going to bottom in the second quarter, we believe. But it's going to take some time to come out of it.
Matt Hornbeck of Morgan Stanley. Matt, my thoughts with you and yours. Always great to get you on the programme, to get your thoughts on the programme. Looking ahead to jobless claims and looking back at what a massive week we've had of bond buying from the Federal Reserve. Next up on the programme, we'll explore the equity market and why we haven't seen enough downward revisions to earnings estimates so far this year. We'll get the call from Credit Suisse next with Patrick Palfrey in the market.
If you need a new website for your business, don't skip this video. Millions of businesses across the
From New York City this morning, good morning. Let's get you some morning calls, some of the analyst action on Wall Street. Of course, those calls coming from those analysts away from Wall Street and at home. Here's your first one. It comes from Stifel, downgrading American Airlines to a hold. The analyst expecting a sharp decline in earnings and revenue due to the coronavirus. Next up, JP Morgan downgrading AT&T to neutral. The analyst seeing further downside as long as social distancing policies keep extending. And finally, UBS downgrading Kansas City Southern to neutral, a 139 price target. The analyst expecting a sharp decline in 2Q volume due to the coronavirus. How many times have we seen that over the last couple of weeks? People throwing in the towel on a series of stocks and downgrading their price targets and their ratings. What we haven't seen much of is a huge downward revision to earnings. We've seen that from Credit Suisse. What about the others? Let's bring in Credit Suisse, shall we? We can catch up with Patrick Palfrey, I'm pleased to say. Patrick, that's something I know that you and your colleague Jonathan Golub have been thinking about too. You've downgraded your estimates. Where's the rest of the market?
Well, the rest of the market is trying to fully understand exactly how this flows through the P&L of companies across the United States. And it takes time to get guidance and to make proper calibration. So what we're ultimately looking for is, can we narrow the estimate range from analysts who have made, let's say, revisions in the past week because they're the ones that are quote-unquote fresh, as opposed to someone who made an estimate revision before this happened and hasn't revised estimates since then. So our goal here is to really try and segment the world is, can we get the freshest possible estimates in order to understand where EPS is heading? And the answer is it's heading lower. I mean, right now, if you were to say just the fresh estimate, last 7 days, what is the expectation? The growth is around negative 13% for 2020.
So, Patrick, take that one step further. If that's your estimate, what's the multiple right now based on where the price is?
This is news.
So that's
see, every time news comes on.
Right now, our expectation is that number needs to fall even further. We're ultimately looking for 2020 to finish around
every single trade goes the opposite way when the news comes on. Like, see how good this was?
You asked about the multiple.
News,
in reality,
opposite
right
way.
now, multiples troughed at around 13 times. Right now, we are closer to around 15. But if we properly adjust that E in the PE, we're going to see something that is actually higher, probably closer to 16 or low 17s. I think that's important.
Gold just be crazy.
For people who had
Yeah, I
valuation
should have stayed
concerns
on
before this, I think they need to understand that you need to adjust the E because it's not adjusting in real time. And if you do that, multiples look much higher than you would expect.
So you saying there's more downside to come here, Patrick?
Well, right now, we believe the earnings need to adjust, and I think analysts need to make those calibrations. But ultimately, yes, we see more downside. I think it's hard to understand fundamentals in an environment like this, but fundamentals are going to be the limiting factor for the market to move higher. Ultimately, we think we need to see a bottoming in the growth of cases before we can actually have the market make material gains from here. So right now, the outlook is probably quite limited because we are likely several weeks away before we see the pace of cases begin to slow.
We need some visibility, and we don't have much right now. We had huge swings through March. My colleague, friend, Bloomberg's Sarah Pontek pointing out that those swings were a record average 5% on a daily basis on the S&P 500 through the month of March. If you think of the market as a high-frequency and perfect gauge of a very, very fast-moving story, which we have limited visibility on, it's very difficult to get your hands around on when that volatility will settle down, Patrick. What are you looking for?
Well, I think right now we have a couple things over the next week or two. Earlier, you were talking about the initial jobless claims which is coming out. I think we need to see greater indication and clarity, not just from any single reading, but a host of readings over the next couple weeks to understand the damage that has been done, particularly to the services sector, because that is somewhat unique. Typically in a recession, the services sector holds up better. But in this instance, it's likely going to be the epicenter of the issues of which the economy is grappling with. So we need more information around the economy, and we need really to get to more corporate guidance from corporations.
Patrick, I've got to jump in. Patrick Palfrey there of Credit Suisse from New York. This is Bloomberg.
Most name brand bars and body washes you rub on your skin are classified by the FDA as synthetic detergent.
Oh, you know what? It's only gold that's dropping, really. Everything else is okay. I might stay out of watching this a while. Let's see. Stock market open, baby. Let's see what we got.
From New York City this morning, good morning to you all. Some technical difficulties on my end. Forgive us as we work some of those things out. We'll try and work through this market open as well. Let's get you some price action. Equity futures going into this down by 3.7% on the S&P 500. It's been a really, really difficult time in this market on the equity side of things. I said just before the commercial break, the average swing that we had in the equity market on the S&P 500 last month, 5%, a record. 5% average daily move on the S&P 500. We didn't even have those moves in the depths of the financial crisis on average, not even in the depths of the depression going back to the late 20s and early 30s. That's what we had in the month of March. Q1 down a clean 20% on the S&P. Q2 we kick things off with equities lower. If you check out the bond market, it's just been a massive story for treasuries as well. We started the year at 192 on a US 10-year. We end the quarter in at around 70 basis points, and we come down another 7 basis points on the morning. The 10-year yield coming down to around about 0.6%. Outside of the bond market and foreign exchange, I can walk you through things very quickly and get you a feel on the US dollar. It has been a big story of dollar strength over the last couple of weeks, and that story continues in today's session. The euro coming down by around about 1%. The range on cable that we saw through Q1 was just unbelievable. North of 132, north of 130 at the start of the year, and a handle of 114 at one point just a couple of weeks ago. Huge liquidity dislocations that people have been looking to fill as central banks, particularly the Federal Reserve, have stepped back in a big way. So that's your price action more broadly cross asset. One thing we can do in the early part of the session is get you some more price action and get to the market desks and head over to Bloomberg's Anne-Marie for a little bit more. Hey, Anne-Marie.
Good morning, John. Look at this first day of the second quarter, and it feels like those dark days of March. S&P 500, Dow are all lower this morning. The Dow yesterday closed the first quarter worse since 2008, exactly 20% since the start of the year. Jeffrey Gundlach is saying the S&P 500 likely to reach new lows in April. I wanted to put the FTSE up there, John. We're seeing a lot of pressure on UK banks this morning. HSBC, Standard Chartered, Barclays, all the big ones pulling their dividend. Why? They're just bowing to what the regulators want. Similar situation we saw in the Eurozone. And then, Jonathan, of course, the Treasury market, the 10-year yield dipping below right now on that yield, 0.6%. If we close at that level, second lowest close if it holds. Switch up the boards. Look at what's going on in the corporate sector this morning. I want to kick it off with
quickly, Anne-Marie. I'm not sure if I've stepped on you or not. I've got a bit of a connection problem on my side of things. I have no line whatsoever, so I can't hear my reporter and I can't hear the guest either. This is what we'll We'll take a very quick break, and when we come back, hopefully we can re-establish connection with Bloomberg's Anne-Marie and catch up with BlackRock's Kate Moore. A lot to get through. We'll be talking to the former New York Fed President, Bob Dudley, as well in just a moment. From New York City this morning, good morning. This is Bloomberg.
Meet Tony. Tony has a good job where he works during the day, but he's always dreamed of owning his own business. He's not ready to leave his day job just yet, but he's just looking for a low-cost, home-based business he can make additional income from. Tony sees an ad for Anna Go Cleaning Systems, and it might just be the perfect fit. He can own his own business in a recession-resistant industry with a minimal investment. He doesn't even need cleaning experience to start.
Anchoring a news program from your living room, but believe me, this is nothing compared to what many people are going through right now in America, particularly in the healthcare system. And our thoughts are with everyone working really, really hard to tackle this health crisis. I'm pleased to say that we can do something a whole lot easier and catch up with Kate Moore of BlackRock. Kate, always great to catch up with you. It's a difficult time for forecasting growth, for forecasting earnings. What's your advice to people at the moment?
Yeah, it is indeed a really difficult time, and I'll just echo your sentiments and say, while it's difficult for us in financial markets trying to think about the future and figuring out entry and exit points, it is infinitely more difficult for many people who are living with this crisis and living with the virus day to day. So here's what I would say. I heard a guest from Credit Suisse make a similar point a few moments ago, which is that it's really difficult to forecast earnings at this point. There are some analysts that have been a little bit more optimistic, who are just trying to sort of bake in weakness in parts of the first quarter and then through the second quarter, and are looking for something closer to a V-shaped recovery in terms of earnings and overall economic activity by the end of the second half of this year. I just think that's an impossible assumption to make at this point, and that there are a few things that investors need to keep in mind. Number one, we don't know how effective policy response is going to be. Yes, we've had like these big bazookas shot from central banks and governments around the world, but it's going to take some time to understand how effective they will be at returning activity to kind of pre-health crisis levels. Number two, we don't know if consumer behaviors are going to meaningfully change. And I think this is really important here because a lot of people are assuming, okay, we'll go back to spending and on services and spending on activities like we had before. but perhaps there's going to be a more meaningful shift, and that will be more persistent. And the third thing I would say is that we're likely going to see even greater bifurcation of winners and losers. You know, companies that have the right technology platforms, that their supply chains are more secure, consumers that, are shifting preferences are going to be really, I think, crowding into certain products and services that will suit their new lifestyle. So there's to be, I think, a greater divergence. And all of these three forces make the forecasting super hard right now, John.
Kate, it's really difficult. I have so much sympathy with all of you at the moment trying to come up with calls. One thing I've tried to do on a program like this is really emphasize the process and try and get a seat around the investor committee of individual banks, individual asset managers to work out what you guys are thinking about. I just wonder, from the perspective of portfolio construction, since day dot, we've been told about a balanced portfolio, Kate, and the rewards that you can reap from having that split in equities and bonds, etc. Are you rethinking those kind of things as you sit around the table with your colleagues and have those video conferences at the moment, Kate?
Yeah, many video conferences, John, and that's a perfect point. Yes, we are having a really active conversation about what a portfolio construction should look like and what we should think about in terms of tools and instruments and assets we can to mitigate risk in a portfolio today relative to where we were a few months ago. Look, one of the things we've been doing in the global allocation funds that I work on, even before this really sort of reached a frenzied pace or significant impact on the economy, was raising a little bit of cash, and not from selling our equities. I think this is an important point. We weren't reducing our high-quality equity names, and our core fundamental views hadn't changed. It was more from observing what was going on in the bond market and saying, duration and parts of fixed income are just not going to provide that same hedge or ballast in a portfolio that they had before, given where yields are. And I think a lot of asset allocators are having that same conversation right now. Pension funds, institutional investors, even individual investors are saying, I want to own equities for the longer term, a longer duration asset, but, what is a balance to that? And, for us right now, we think that answer is cash, not more, especially in treasuries.
Kate Moore, appreciate the call this morning and always look forward to catching up with you next. Kate Moore there of BlackRock. Even with the difficulties putting on a program like this, we can keep bringing on world-class guests to Bloomberg TV and Bloomberg Radio, and we can do that again right now with Bill Dudley, the former Federal Reserve Bank of New York president. He phones in to get the latest on the situation with the Federal Reserve and beyond. Bill, fantastic to get your thoughts on this show. A piece that you put out on Bloomberg Opinion today about the Fed not being able to bail everybody out. Just explore it a few steps further for us, Bill.
Well, we saw last week fiscal legislation that authorized the Treasury to give $454 billion to backstop Federal Reserve lending. And that lending is going to cover a wide range of markets: commercial paper, corporate bonds, the securitization market. But there are a couple gaps. One gap is lending to municipalities, and another gap is lending to non-investment grade business. I think the Fed will fill the gap in terms of the municipal debt market because Congress has actually said the money could be used for that purpose. The Fed hasn't set up a facility there yet, but I think that will be forthcoming. I think the difficult choice for the Fed is what to do about the non-investment grade corporate sector. That's a sector where people are highly leveraged, not because of the coronavirus so much, but because they chose to be highly leveraged. So I think that's going to be a more difficult task for the Fed to take on going forward.
Bill, as you've pointed out, they've almost become a guaranteed buyer of last resort across a range of asset classes. The extra effort that they're putting in to support SMEs is complex, it's difficult, it's sophisticated. And Bill, you can have a plan and it can look good on paper, but to deploy and hit your target is quite another set of things altogether. Walk me through how difficult this is going to be for the Federal Reserve to help support SMEs and how quickly you can ramp up a program like the one they're trying to do at the moment.
Well, they did announce a Main Street lending program that is supposed to address smaller businesses, but we haven't heard any details yet, and that's not surprising given that they've never done this before. This is going to be more difficult to stand up because it's not something they can pull down from the shelf from the last financial crisis.
Bill, would equity be part of this situation as well? They've bought a lot of stuff in the bond market, going into credit, Moonies. Do you think equity comes on the horizon too? I believe I've lost a connection with Bill Dudley now, the former New York Fed President Bill Dudley. I don't know if you can hear him. I can't hear him. Let's get a check of the markets for you very quickly, shall we? I'm doing my best here for you guys. 13 minutes into the session, your equity market shaping up as follows here in New York City. My prices,
see how that one flipped too? This one flipped too because of the news. I'm deep in the trade to the point where it don't matter too much. But it still flipped though.
Talking about those big swings through Q1.
But I ain't worried about this.
I
ain't worried about it though.
If you're looking at the bond market,
but I'm deep in the trade, so
Treasuries set up as
I'm fine. But these other ones right here, I got this one like midnight.
0.6%.
So if I could,
foreign exchange, this is what
I'm just worried about this one because it's close to my
stop.
Once I survive like this first news, and I can get up to about right here,
the dollar just giving up some of that strength. Euro dollar coming down by around about 1 percentage point.
I just
the really interesting part of the credit
survive
story
this
over the last couple of weeks.
So I'm looking
has
at
been
it.
The huge dislocations we've seen in investment grade.
This one I got in midnight too.
Getting smashed around by four sellers, and it's opened up.
I should be alright though, because this is a
people on the buy side to step back in.
Zone right here anyway, so it should bounce
by
back.
The Federal Reserve backing them up and doing the same thing. What's interesting though is the amount of homework that's going into this situation on the buy side, with a huge team of investors trying to draw a distinction between dislocations because of illiquidity.
This one, same thing. Let me mark it up. So
and huge moves because of credit risk. And quite clearly, what you want to do is try and step in on where some of those credits, those high quality names, have been smacked around for all the wrong reasons, not because of credit risk, but because of liquidity reasons. And that's where the opportunities are. What's been interesting for me is how many people have taken the firmer
every time we get here, for some of you guys who don't know, every time I get to this line, it bounces the other way.
Pretty much everyone I'm
I mean,
to at the moment,
you know,
of
course it shot through a couple times in the past. I'm like, this is the 4-hour time chart, so I can see. Recently, every time I get here, it struggles. Boom, boom, even right here.
The fundamentals are so uncertain.
I should be fine on this trade.
And there is so many things
this one
you
should
need to
still
try
go
and get your hands
positive.
around and can't. And that's where the complexity of all of this comes into
I'm
it.
just suffering a little bit now because of the news.
In just a moment as
Once
well.
these guys shut up so I can make my money.
Out of the United States of America. So let me try and do that for you right here, right now, in the United States. Your PMI about to drop across the Bloomberg terminal in America. We will have an ISM manufacturing at around about 15 minutes. That PMI in America coming in as follows on my Bloomberg at 48.5.
This is a consolidation zone.
48.0. The previous read 49.2. What we will get in the coming days
so it's going to
is
struggle to pass that line too.
A brutal economic story in the United States of America. It has been terribly difficult.
This one,
the economy is going to get a whole lot tougher, not
gold.
just for the labour market, but for
manufacturing,
manufacturing, for services as well. On the labour market side of things, quite clearly, it's been difficult to get a read on just how much damage is being done. The surveys that we will look for will come from non-farm payrolls. They will come from the ADP report. The problem is when the survey week falls, March 12th. So to really get a read on what the labour market looks like, you need to look to claims, and claims were historic last week, and they're set to be historic again this week. Morgan Stanley's Matt Hornback and Ellen Zen are doing a fantastic job of running through some of those difficulties and looking for a 4 million for initial jobless claims. One thing that I've really tried to focus on a program like this over the last couple of weeks is recognise that that's not just an economic statistic.
This is a bullish sign.
That data point is a huge amount of
economic
pain and economic
more
difficulties. And on a show like this, we have to look at what policymakers are doing, huge plans, and then we have to ask ourselves how those plans are being deployed and whether they can hit their targets and how well those plans can hit those targets. And that's going to be the focus in the coming weeks. The politicians down in Washington, D.C. have done their bit. They've come up with a $2 trillion bill. What we need to see happen now is the SMEs get hold of that money and get hold of it quick, and the consumers, the Americans that need to pay their bills, get hold of that money too. And the longer we wait, the more damage that will be done. And the more damage that will be done, the more difficult it will be to come out on the other end of this. So there'll be things that we explore over the coming days. So here's what we do on this program. We're going to try and address some of these huge technical issues we've got. Hopefully I can re-establish a connection to my control room as well. And then in just a little bit, we'll get the view from Bloomberg's Michael McKee on the data that we've had today and the data that we'll get tomorrow. And we'll run you through some of the big things you need to look ahead for in the days and weeks ahead. From New York this morning, good morning.
This is Decision Tech. find a stock based on your interests or what's trending. Get real-time insights in your customized view of the market. It's smarter trading technology for smarter trading decisions. Fidelity.
Hey, hope you guys enjoying the stream. If you guys got questions, drop some comments down below. Yeah, see, this one's reversing pretty good. I ain't worried about this. This is boring right here. They about to get that bread from the stimulus package, so I'm cool with this one. I might even buy some more. I'm gonna see how low it go. Carnival. I don't know how I feel about Carnival yet. I want to get in, but I ain't sure. Some of these I might just. Boeing, I'm gonna buy and hold, but the other ones I'll probably just like buy and sell when they hit a certain peak. Disney, I'm gonna hold on to Disney. There we go. That's what I want to see. I just want to see it close up a little bit more above it. Like about right here. Where it's at right now is good, but make it even better. About right here, that's a bullet sign. Come on, man.
From New York City for our audience worldwide this morning, a very good morning to you all. Let's work through the day ahead, your trading diary, what you need to be watching through the next couple of days.
For you guys that don't know what I mean by the news, normally it's like around 7 o'clock, and another one's like around 9. Then you got these, the one that you see on my screen. But this is just USA. This isn't including different countries, because they affect us too, in case you guys don't know that.
Bloomberg's Michael McKee joins us now to run you through some of the data points you need to be focusing on. And Mike, I keep going back to this story. It's very, very difficult to get a read on the labour market from things like non-farm payrolls. The focus, as you've pointed out, Mike, will be on jobless claims that come out tomorrow.
Yeah, because the non-farm payrolls report, like the ADP report that came out earlier, is focused on the week that includes the 12th of the month. So that's much, much earlier than the real layoffs started. So you're going to get a number that is nowhere near reflective of how many people are out of work right now. The ADP number, 27,000 jobs lost. They count people who are not working but still on the payrolls, where the government doesn't. So the government number will probably be worse, but they won't reflect what we saw last week. 3 million jobless claims filed. We got 3.5 million for a consensus for the most recent week, which we'll see tomorrow. But we've got
come on, baby. You know, come on, baby.
So it looks like it's a really high number. The question is,
that's a good sign right there. Just don't pull down.
May not have a lot of market impact, but as you were just saying, certainly a lot of personal impact.
In a big, big way as well, Michael, and I always appreciate the fact that you relay that message too.
Just like that.
Michael McKee on the data
That's a
over
bullet
the next
sign.
couple of days. Let's get to a final guest, the final view, shall we, on this program? We can do that
for those of you who don't know.
New York Life Insurance.
A candle that closes. They got it closed like this, not just be like this.
We get some ISM data.
That shows a rejection.
Walk me through how you and your
in
team
this
are
area.
interpreting the latest
I'll show you an
economic
example.
data that comes through, not just
see,
in the United States,
gold's too
but
crazy,
worldwide.
so I can't. Let me find a different one.
Well,
So like this. You see how it dropped down and came here and then it shot up? That's normally what it does when it drops down like that. It's a sign. See, drop down, came back up and shot up.
May not move fast enough to keep up with the virus.
See, this one right here, dropped down, came back up and shot up. Some people trade off of that. I trade off it sometimes too.
Countries and these fast-moving business surveys in other countries just to provide a rough benchmark for the arc of the virus impact. But even there, every country's economic structure and experience with the virus has been different. So it's really only a rough benchmark.
Lauren, just in terms of how you positioned and how we were positioned, we came into this, and as you pointed out, we were positioning for this late cycle reacceleration. We weren't positioned for how defensive we would need to be as we work our way through a range of issues. How are you set up at the moment, and how do you suggest others should be set up going into what could be a prolonged economic downturn in a way that many people didn't imagine even as soon as a month ago?
You know, we were positioned defensively actually too early. We were caught offside by the Fed's adding to its balance sheet late last year, which provided some support for equities that didn't match the fundamentals that we were seeing in data. That
6 more minutes.
Served us relatively well in this short term.
6 more minutes on this candle.
But moving forward, opportunities may be driven by market flows and balance sheet capacity rather than classic fundamentals. And that has two really important implications for positioning now. In the near term, it's classic don't fight the Fed. The Fed's been active to keep market functioning in sectors like investment-grade bonds and municipal bonds. That doesn't mean they're a supporter of those markets forever, and it doesn't mean that you should invest blindly, but it's difficult to say that these asset classes will perform poorly in the next few months with the Fed so active. The second thing it means is that unless I see a real shakeout of the late cycle conditions that we had leading into the virus impact, then we probably won't have restarted the cycle in the same way that we typically see. And so some of the cyclical upside opportunities, looking at small caps, for example, emerging markets, value stocks, those opportunities will look a little bit different on the other side of this crisis, and asset managers will have to be creative with how they invest in the upside opportunity.
Lauren, I just want to fit one final question to you, and it's something that you're watching closely to see how this economy will evolve in the coming months. And the thing that you're focused on are the back-to-work policies. There are certain things we can't predict. There are certain things that are hard to read. But on the back-to-work policies,
I like it.
I guess multinationals,
can't get too happy. I still got 5 more minutes on this.
You'll get a decent read on where this economy is going, won't you? Is that something you're focused on?
Yeah, we're very focused on back to work. Look, I think there's 3 main risks that we're watching with respect to this virus, and nobody knows exactly how they'll progress. But we're looking at liquidity risk. We're looking at credit risk. Both of those have been improved by policy measures taken so far. But health risk is one that we don't have great models for, and grim news is going to lie ahead. So we won't be out of the woods from a market perspective until
when you survive the news, that means you're good. Really you know what I'm saying? I mean, it ain't over yet, but I'm in there. I'm in there.
And so, again, we mentioned with the fast
like I was telling y'all yesterday, I've been in this one for 3 days, so I'll survive 3 days worth of news. See, look. That's when I first got in. Nothing but good stuff. News. News again. You know what I'm saying? Like, that's when it's news, man. You see stuff like that, that's the news. Then everything good. Then this is news right here.
Lauren, fantastic to catch up.
And then once these people shut up and mind their own business, and we can get this money, baby. Let's go.
Life insurance from New York. That does it for me. I apologize for those technical difficulties. I do think it's worth remembering that if you can work at home, like I can work at home, if you're still getting paid, like I am, that is a privilege. That is a real pleasure in this moment. And at times of difficulty, I think that's something we've all got to reflect on. I'm going to run away now and get a hard drink because I believe that it's 3 p.m. in London. And I'm going to raise a glass to the healthcare professionals that are working to keep us safe worldwide. And I hope that at some point today you do the same. From New York City this morning, good morning to you all. This was the Countdown to the Open. This is Bloomberg TV.
Okay, it's looking good.
Cryptocurrency is changing the way
Pulling
people
back.
interact with their money.
See that?
It lets you be your own bank
that means I'm in
without
profit.
ridiculous and
I'm
unnecessary
barely in
fees.
profit, but profit
The problem is that the
is
stores
profit.
you shop at don't accept crypto, but Blockcard solves that. It's the best way to buy whatever you want at over 50 million merchants globally using your cryptocurrency. In just 5 minutes.
So this one I'm barely in profit. How about this one? Like I said, this is news right here, so I should be fine because this is a hard zone to pass anyway. So I should be straight. Just gotta be patient. So in the next 2 minutes, we're gonna see. Hey, sometimes right before the candle closes, see, well, we're gonna go by. Not my clock is the same, but this one's the exact amount of seconds. So normally when right when it's about to close, it's usually either it's gonna close or it's gonna shoot in one direction. And it's crazy, man, because you'll think everything's fine, and then all of a sudden, wow, man, come on, man. So that's why I ain't, like it looked good, but I ain't good until that candle closed, man. When that candle closed, then we in there. This actually might be a good entry for some people to get in. Only thing is, it would be a hard stop loss though. That's a long stop loss. This is also the 4-hour time period too. I mean, it's a long stop loss for me anyway, so I just want to get in twice, but I'm already in. Okay, I got 10 seconds. Let's see how this candle gonna close. Watch they play me. See how it's acting up? Oh, shoot. There it is. Oh, there it is. Come on. Come on. I just need to pass this now. Don't keep going down, man. I think I should be fine, though. That's the hourly candle. That's a good sign for an hourly candle too. So let's see how everything else looks. You see how this one was way up here, then it just see that's what I was showing y'all, trying to show y'all earlier. This one was way up here and it just shot down that way. This one right here.
Months after Hurricane Maria, Puerto Rico is still in peril.
That means, what time is it? 10?
Huge
Okay, so
swaths
some
of the
news
island
coming on
are
right
still
now.
without power, running water, or access to.
Need a professional website? I created one for our startup using Wix. Let me show you how I did it.
There we go.
Okay,
See how you see how they be quiet, everything looking good now?
Is my video
Let's get
good?
this money, man. Let's get this money. See,
Let me-
gold is
Welcome
always
back
crazy.
to Yahoo Finance Live. I'm Brian Sazi. You're seeing markets under severe pressure this morning. At one point, the Dow was down over 800 points, now down close to 700 points. And a lot of folks I talked to on Wall Street are calling or looking for a retest of those lows from a couple weeks ago. And it makes sense. We did have President Trump come out and warn on the coronavirus. You could see a spike in infections over the next 2 weeks. And look, this morning, too, we had Fitch come out and lower ratings across the board on a lot of struggling retailers with their stores closed right now. So a sell-off wouldn't make a lot of sense. And on that note, let me bring in Inez Ferre, who is studying these markets very closely. Inez?
Brian, that's right. And just taking a look at the Dow Industrial
This one
Average
getting
right
real
now,
close to
we're
my,
seeing
my
a sea
order.
of red here. You're looking at Microsoft that's down about 2%. Really, the only one that's in the green right now is Walmart. Apple down more than 2%. The ones that are losing the most right now, JP Morgan Chase. Boeing off of its low from earlier. Boeing down more than 3% earlier. It was down about 5%. And then just taking a look at some stocks that are moving this morning. Mallinckrodt actually moving to the upside this morning. This is after the company said it received approval for clinical trials in Canada of an inhaled treatment for coronavirus to treat lung complications because of the illness. Also looking at Xerox this morning, Xerox down more than 4% after the company announced yesterday that it was abandoning its hostile takeover bid for HP. This is a win, of course, for HP since HP had rejected Xerox's $35 billion offer numerous times. HP this morning down more than 10%. And then just taking a look at Match Group, that's down more than 3%. Match, this is the owner of Match and also Tinder. And the company says that it's attracting fewer new
I have
users
a buy stop here.
during
I
this
might,
coronavirus, but the
I
chats
don't know.
are now longer, Brian. So Match is saying that it will, for Match, pivot to video
I'm gonna
chat
see how far
faster.
down Carnival goes.
I guess people have to make sure that their
I might
photos
cancel
are
my
up
buy
to date,
stop
Brian.
with
Yeah,
carnival.
no, what do they call it? No catfishing. But I'll leave it there. I'll try not to say much on that front. But we have full team coverage on the markets. I have Heidi Chung and Alexis.
Like I want to buy in.
Alexis, let me start with you.
I'm not
What's
sure.
on your radar screen this morning?
I might switch my buy stop.
Hey, Brian, not sure if Alexis is actually on this call. I think it might have dropped, but let's just talk broadly about what's going on this morning in early trade with the markets. Just when we thought all of that extreme panic selling might have stabilized a bit, it looks like people are still very fearful about the fact that the death toll might rise to the 100,000s and 200,000s here in the US. But specifically on my radar this morning, we've been talking a lot about energy and oil, especially as we have WTI crude hovering around that $20 per barrel situation at the moment. But when we're thinking about what's going on with Saudi Arabia and Russia, I think the worst is yet to come here. It seems as if Saudi Arabia is expected to pump even more oil supply into the market. And so I think that everything going on with energy right now is giving investors a lot of concern and a lot of worry, especially as we see the broader markets continue to get pummeled, Brian.
I don't know.
All right,
I think we have Alexis back.
I think I might just still take this.
Welcome
back
back.
with
What
you.
are you looking at? What are you looking at?
Yeah, I'm looking at Home Depot because the company says it's going to close its nationwide stores earlier each day. It's going to promote some more vigorous social distancing for customers. So it means that some customers, we see a lot of grocery stores doing this now. They're keeping people outside the store 6 feet apart on a line and just letting in a certain number of people, having them shop and then leave the store. This is a little troubling when you look at the real estate market and Home Depot's role
This
in
is a
all of
low
that.
right here. So when
While
it
a lot
taps
of deals,
this,
we had Melissa Cohen on,
gonna
a
probably
real
come
estate
back
agent
up.
in the last segment, while she says deals are getting done. I mean, the volume of the amount of deals is still way down. We saw mortgage applications down
Let's see how far I
24%.
can go.
Refinancings, by the way, though, are up. So people
So I
are
got a
staying put, but trying to
1095.
take advantage
Wow, I
of
got
these
1095
mortgage
right
rates, which are at or near record levels. But when it comes to a store like a Home Depot, home improvement
Yeah,
store,
I'm gonna get it at
if people were
1095.
thinking about home renovations because they're home more now,
I got
maybe
an
they're
alert
buying their
of some
items
sort.
online
Let's see.
and getting them sent home. Is that going to continue now that Home Depot has put these restrictions on store hours and how many people can go into the store, Brian?
Yeah, no, great point, Alexis. And I can confirm there are still no masks in my local Home Depot Lowe's. I went this past weekend, no going masks. I think they thought I was crazy for even trying to ask. But hang tight. I do want to look at our editor-in-chief, Andy Sower, in his latest Influencers, spoke with Facebook
I got a
COO
trigger
Sheryl
right here,
Sandberg
so
about
I
misinformation.
think when I tap this, it's gonna get me in the trade.
been a
I think when
rough
it go up, I'm
phase
probably
for
gonna sell it.
Facebook. It's been years of really figuring out how do we get ahead of things like
Look at that.
misinformation.
There we
And we've
go.
made
See what happens
massive
when the news
investments and we've
news
learned a
still
lot.
going
And
on, but you
I
know
think those
the
lessons,
opening
those
bell,
investments are
that
really
9:30
serving us
bell,
well
or
right
the
now.
7 o'clock one too,
You know, we
and the
know
9:30
a
bell.
couple things. We
That's
know
when it
that
really
we
start
don't want
hitting.
any
But now we looking
misinformation
good.
that leads to
Looking
imminent
good
harm
here.
on our
Let's see what
platforms.
Disney look like.
And we know we're not the experts. So right at the beginning of this, we
This
went
one
to
right
the
here
WHO
still trying to
and the
hold.
CDC and health ministries
They're
and
playing with
said,
me right now. It's all
please
good,
help
bro.
us. You tell us what are the facts that cause imminent harm that you want down, and we're going to do everything we can to take them down. And all the tools we've built up over the years, the AI tools, the machine learning tools, and the human review, we're deploying all of those to get these things down as quickly as possible. And I think that makes a really, really big difference. We're also trying to proactively push the messages they want out. So the WHO asked us to get a hand washing video out. Now, kind of sounds small, but it's not, because now that I saw it, and I did one, they asked me to, and I did, washing your hands the way they want you to really protect yourself against the virus, I didn't understand what that was. That is, 50 seconds, 40 seconds to 60 seconds of, very rigorous rubbing, but that can save lives.
Yeah.
So we are both trying to take down the stuff that can cause harm, but really get out the stuff that can lead to some good and some prevention.
And you can watch the full Influencers with Andy Sower tomorrow at 5 p.m. on Yahoo Finance and our YouTube page. But do stick around. We'll have a lot more on the markets right up after this. Welcome back to Yahoo Finance Live. I want to get right to Dev Kantasaria, Valley Forge Capital Management founder. Dev, good to see you this morning. I really liked your notes. You like to invest in monopolies or companies that pretty much resemble monopolies. So in this type of market, what are those companies?
Yeah, so I think the best thing to own when there's market chaos are businesses that provide predictable earnings, strong organic growth. So companies that fit that description are things like Moody's, Intuit, FICO that produces the consumer credit scores. We own things like Autodesk, MasterCard. And so these are companies that sit at the top of the food chain and can wait out a period like this and come out of the other side even stronger.
Dev, many people may not know this, but you actually graduated from Harvard Medical School. You decided not to go into medicine, but to go into finance. And you also don't hold any healthcare stocks in your portfolio right now. I found that very interesting, especially during this environment when healthcare seems to be one of the bright spots, because a lot of companies there are working on treatments or vaccines for COVID-19. Why are you bearish on this sector?
Yes, I spent many years as a venture capitalist as well. So I've been at the ground level seeing how medical devices and drugs, make it through clinical trials and ultimately get approved. Biotech companies, pharma companies, medical device companies don't provide the predictability that we would like to see in earnings over a 10+ year time frame. So we're very much focused on steady and predictable earnings. And although those businesses can provide us a wonderful social good in this time, at this time, as a business, I can't predict what their earnings are going to be 10 years from now.
Hi, Dev. It's Heidi Chung here. So I want to talk a little bit about the economy. I think one thing we do know is that the damage from the coronavirus outbreak is about to be extremely brutal. First quarter was really bad for the markets and the economy. Second quarter is expected to be even worse. But most people out there, most experts are saying that the economy is going to bounce back in the second half of this year. Do you think that's a realistic expectation at this point?
Yeah, I think generally people are unrealistic about how quickly we can return to normalcy. So I think it's going to take longer than what most people think. And the big question is the rebound going to be swift? Is there pent-up demand, or is it a slower recovery? What I would recommend to investors is to try to look at steady state 12, 15, 18 months out from now. The next few quarters are going to be ugly, but try to look at what those steady state earnings could be for the companies that you love and have that type of time frame rather than trying to market time, when to get in and out of stocks over the next couple of quarters.
Dev, you're in the hedge fund industry. When you talk to your peers, do you think there are still a lot of crowded trades out there that need to be unwound, given the new reality in not just the U.S. economy, but the global economy?
Yeah, where I'm seeing crowding is really around market timing types of events. So people piling into a certain pharmaceutical or biotech stock, people buying, some types of defensive names, which may work out for the next few months, but are not really great businesses to own for the next 5+, 10+ years. So I think people are focusing increasingly on short-term moves, and that's really not the best playbook to make money long-term.
What do you make of the Federal Reserve's actions right now, opening up a whole bunch of different avenues to continue to pump liquidity into the market? Do you think that what they've done thus far has made a difference, and do they need to do more?
Yeah, so I think there was a point of maximum fear and panic last month. And I think what we've seen with hospitalization and mortality rates is that things are not playing out in the worst case scenario. So things will be certainly worrisome, but a lot more manageable than initially expected. And so, fiscal policy, government policy can't help fear and panic in a pandemic situation. But now that some of those risks are moderating, the fiscal policy of the Fed, of the government, has absolutely been helpful. And I think I've been surprised by the size of their actions and their ability to really do anything, essentially. And so it has been quite helpful to calm down markets. It will be helpful in getting us, back on the road to recovery. So the actions have been, I think, intelligent, of the right size, and extremely helpful.
Dev, I want to talk a little bit about different sectors within the market right now, specifically energy. We've been talking a lot about oil and the energy market here in the on Yahoo Finance, but I want to get your thoughts on where you think this is all going. How low do you think oil can go at this point? We're flirting right up that $20 per barrel mark. So what's next here?
Yeah, so I've never invested in an oil company in my life. We don't invest in companies whose fortunes are tied to the price of a commodity. There's companies that can make money when oil's $40, but then become profitless when oil drops to $20. So I think making an investment in an oil company, oil exploration, or even the commodity itself, to me, is a speculative activity. And so I would shy away from oil and energy altogether, as I look at opportunities in the marketplace. There's wonderful companies trading at steep discounts today. And I'm not sure that you really need to take the risk of a commodity type of business when you have so many other great opportunities to look at.
Dev, I could certainly appreciate wanting to invest in companies that resemble monopolies, but more tactically or short term, what type of speculative trades are you putting on right now?
Yeah, so we're very consistent. We're really playing out the Warren Buffett, Charlie Munger playbook in what we do. So the timeframes in which we look at things are generally 5+, 10+ years. So we're buying businesses that we're going to love 5 years from now, 10 years from now. And again, I think that people look for safe haven assets in a situation like this. They look for gold, they look for Bitcoin, bonds. I think that is absolutely the wrong thing to buy. What should help you sleep best at night are companies that are really dominant, that can weather this storm and come out of the other side and continue where they left off and prosper from there. So I think that the whole notion of what is a safe haven asset is wrong, in the minds of most investors.
And Deb, we know we're going to be getting bad economic data in the days and weeks to come. Tomorrow, jobless claims could top 3 million, people are saying. We've got the monthly unemployment report out on Friday. What should investors make of these numbers? How should they handle them when it comes to their day-to-day trading?
Yeah, the market is forward-looking, and so we know the number is going to be ugly. The question is, what percentage of those job losses are permanent? And our company is going to rely increasingly on automation, AI, cloud services, and make permanent changes to their workforces coming out of this situation. That is an unknown. I would expect some job losses to be permanent. But I think the headline numbers that you'll see over the next couple of quarters, people should largely ignore and focus on where they think we're going to be 12 to 15 months from now.
All right, we'll leave it there. Dev Kantesaria, Valley Forge Capital Management founder, thank you for the insights. And still to come, we'll talk to Waste Management CEO Jim Fish, who has stepped up big time to support his employees amidst the coronavirus. Stick around. Welcome back to Yahoo Finance Live. And you're seeing the markets under severe pressure, holding in the red pretty much all morning long. I want to get right to Inez Ferre, who's keeping a close eye on all things markets. Inez?
That's right, Brian. And just taking a look at, I want to bring up the Dow right now. Looking at the Dow right now, you're seeing that most of the Dow components are in the red. The Dow is off by more than 2% right now. Caterpillar, Walmart, P&G, those are the ones that are in the green. But if you take a look at Apple, that's down about 3% right now. And you've also got Boeing down almost 5%. Boeing and JP Morgan Chase down more than 4%. We've got right now real estate and financials. Those are the sectors that are leading to the downside, Brian.
All right, thanks, Inez. And I want to get right to Alexis Christoforous. Alexis, what are you watching so far?
Looking at the job market, this is a big week for job market news, Brian. We're going to get jobless claims tomorrow. Last week, they were at a record high. And this week, we are expecting millions more people to join the unemployment lines. And then, of course, on Friday, we're going to get the government's monthly jobs report. We found out today that private companies shed 27,000 employees for the period through March 12th. That's according to ADP and Moody Analytics. That number was actually not as bad as expected. And a lot of the reason why is because a lot of this pandemic was not already baked into that number, doesn't reflect sufficiently in that number. So we'll have to see what the rest of the week brings in terms of jobs, but we know that the news is not going to be good. ADP did report a gain of 179,000 jobs in February, but again, that is backward looking. And in fact, a lot of the data that we're going to be getting is backward looking, with the exception of those weekly jobless claims, which is really what the market's holding on to. Those weekly jobless claims, 281,000 last week. That number is expected to possibly top 3 million this week, Brian.
Yeah, that's a disturbing number, Alexis. And for me, I'm just taking a quick look at some of these retail stocks. Again, more of these companies are coming out furloughing their workers. I'm looking at JCPenney down 9%. The stock is trading at 33 cents a share. Simply mind-blowing. You had Fitch come out this morning warning about a lot of retailers, Kohl's, Macy's, JCPenney, but in particular JCPenney guys worried about liquidity concerns. But let me bring Heidi Chung back into the mix here. Heidi, I know you're following the markets, and all week you've been making some great points on the VIX. The VIX is still pretty darn high.
Yeah, it's still at that 55 range right now, but it's nowhere near those record highs that we saw, I guess, last month now, because we're in April. And I think one of the biggest concerns out there, specifically amongst market participants, was the fact that when the market was rallying last week, the VIX was rallying along with it. But today we're actually seeing the VIX rise while the market is lower. So I think that is a good sign. But you were just talking about the different industries that have severely been impacted by the coronavirus. Of course, we've been talking a lot about that here on Yahoo Finance as well. You brought up retail. We also found out that retail REIT Simon Property also had to furlough and lay off quite a bit of folks as well. But the restaurant industry also getting pummeled by this outbreak, especially as those dining areas are being closed. We're getting even more companies joining the long list of companies warning that they're not going to be able to meet their financial guidance. So that is of concern. But I think the main question is, okay, when we come out on the other side of this, will these companies be able to bounce back? Will they be able to bring back those employees that they had laid off? I think that's a big question as we look towards the future, as how the companies and these markets will sort of rebound after all of this, Brian.
Yeah, Heidi, 2021 can't get here quick enough. But do stick around. We'll have much more on Yahoo Finance Live all day, and most importantly, straight ahead. Welcome back to Yahoo Finance Live. And I want to bring in TPG Global Senior Advisor and former Ford CEO, Mark Fields. Mark, a long time no talk. Thanks for taking a few minutes this morning. We have had, so far this morning, auto sales data in the U.S. It just has not been good. And as a veteran of that industry, when do you think U.S. auto sales will come back? We're already getting reports that cars are piling up on dealer lots, incentives are starting to kick in. You're seeing a lot of the marketing switch to very 0% financing. When does the auto industry kick back into gear?
Well, as you said, you're going to see some ugly industry numbers today, and that's really due to the lockdown and the stay-at-home orders that are in place around the world. Dealers have seen significant fall-offs in traffic in the second half of the month. But to your question, this really all comes down to consumer confidence. And at the end of the day, consumer confidence is not going to be rebuilt until there's very clear and unmistakable evidence that we've kind of turned the tide on the virus, along with making sure that there's continued financial support from the government. So until that happens, I think you're going to see consumer confidence, to use an automotive term, to be in a little bit of limp home mode until that happens.
Mark, would you say that right now the biggest problem facing the auto industry is actually not the supply chain? We see China coming back online to a large degree, but is the bigger problem consumer demand, not just here, but globally?
You're exactly right. Listen, there's still supply chain issues, but at the end of the day, this is around consumer demand, and it gets back to my comment on consumer confidence. And that's why you're seeing the OEMs take down their plants. First and foremost, it's to protect the employees. But secondly, if they have no demand and no visibility on the market, there's no sense in building inventory that is only going to sit at dealers' lots and put more financial pressure on dealers. So this is really around, what is the true demand? Now, there's still going to be some supply chain issues. For example, when the plants come back, it's going to be really important for the industry to all come back at the same time, because the supply base, which supplies the very important parts for the OEMs, if they have interruptions because of sporadic COVID infections, that brings their plants down, which will ultimately bring down the OEMs' plants. And that's why, as you think about the changed world, when we get to a post-COVID world, OEMs are going to have to carry more cash, because they're going to have to carry more inventory. That just-in-time inventory, they're going to need buffer and safety stocks for those downtimes that might happen at certain plants. And then secondly, it's things like shift changes are going to take what used to be 15 minutes, may take an hour because of the distancing protocols. So everybody in the automotive supply chain, including the OEMs, are going to have to keep very focused on liquidity.
Mark, you led operations at Ford, I believe, before you became CEO there. How hard is it to make ventilators inside of car manufacturing plants? We're seeing GM try to do it. I believe Ford said they'll have ventilators starting to hit the market in June. But it's not like you flip a switch and you can make ventilators running down a car manufacturing line.
That's correct. Well, first off, I think it really shows the expertise and the goodwill from the OEMs to say, listen, in Ford's case, it's going from quality as job one to saving lives as job one. And you're exactly right. This is not about just flicking a switch and turning an automotive assembly line into producing ventilators. But the expertise that the OEMs and the automakers bring in terms of design, engineering, and production, working with manufacturers like GE and others who really know how to design these ventilators. The OEMs are really good at scale and building at scale, and that's why at their parts plants, like in Ford's case in Rawsonville, they're going to be using that smaller plant to make these makeshift lines and get that scale and get those volumes of ventilators out to patients that need them right away.
Mark, talk to us a little bit about how the automakers are doing today versus 2008 during the Great Recession. We know back then they had to get a bailout from the government. Are they better positioned to weather this coronavirus storm than they were during the financial crisis of 2008? Albeit these are two very, very different situations. But how is the overall health of the auto industry now compared to then?
Well, the overall health of the auto industry is much, much healthier than it was back in the Great Recession. The liquidity that both GM and Ford have range from I think 35 or 36 billion dollars. That's good enough to you're assuming a $5 billion burn rate every month. That's 5 or 6 months that they can run without having actually any production. It's very different back in 08 and 09. Even the supply base, the tier one suppliers, who are the biggest suppliers that support the automakers, they're in much better financial shape, much better contracts with the OEMs. That being said, this is all about liquidity because there's no visibility of demand going forward. We don't know when the consumer is going to come back. And that's why they're taking all these actions of cutting non-discretionary costs, cutting compensation. They're going to have to move back some new product launches if for any other reasons the engineers can't be testing and prototyping. In addition, the government can't be approving things like EPA labels. So those things will be pushed out. But they're in much better shape. But every month that goes by where they're not producing, it causes more stress throughout the entire supply base. And that's why liquidity is so important up and down that chain.
Mark, you led the charge at Ford, and to me it feels like yesterday, with mobility, electric cars, mobility, autonomous driving. But as we stand here today, the auto industry is pretty much shut down. You have oil hovering around $20 a barrel. Gas prices have plunged below $1 in some parts of the country. Has the electric car movement and the mobility movement, I'll add Uber and Lyft, has that been set back, let's say, 10 years?
Well, I won't give a time frame of how much it's been set back, but obviously it's been set back. In the case of autonomy, listen, there's no sense if you're an automaker to be spending at the same pace on the autonomous future when your number one priority is surviving the non-autonomous present. So those investments will be slowing down because the payoff for that is much further down the road. In the case of electrified vehicles, this is going to be another casualty, if you will, of COVID, in which an environment where you're going to have consumer purchasing power severely impacted, and the fact that electric cars are still viewed as luxury items because they're more expensive than internal combustion engines, clearly consumers are going to be very economically focused, and therefore moving to that mass adoption of electrification is going to move out. Plus, as you said, in some cases, a gallon of gas is cheaper than a gallon of water. And that crossover, that cost crossover line that we always talked about has now, between ICE engines and electrification, has absolutely moved to the right. We just don't know how much to the right. That's going to depend on how we get a handle on this virus and bringing consumer confidence back.
Mark, so now you're at TPG Global. You're a senior advisor there, working with a lot of industrial companies. What are they telling you?
Well, what we're seeing right now across the board in the companies that I'm involved in is a lot of pressure in the marketplace, but it depends. I work with a great company by the name of Transplace. The CEO there is a guy by the name of Frank McGuigan. They do transportation management services, and they basically do logistics for a lot of the top 100 firms in the country, Fortune 100 firms. And what we're seeing is a little bit of a barbell effect. Discretionary, furniture makers, things of that nature, that demand is way down. Consumer products companies, the demand is way up. But overall, what we're seeing is a big slowdown across the board, across all the companies that we have. And like every other company, we are working with our CEOs to address costs, to make sure we're as efficient as possible, to make sure we have as much liquidity as possible, because that visibility of revenue going forward is very unsure right now.
All right, let's leave it there. TPG Global Senior Advisor and former Ford CEO Mark Fields, good to see you again. We appreciate the time.
Thanks, Brian.
All right, and do stick around. We'll be right back with Waste Management CEO Jim Fish. Welcome back to Yahoo Finance Live. I want to get right to Waste Management CEO Jim Fish. Jim, always good to speak with you here. And I must commend you. You have stepped up big time for your employees. Walk us through exactly what you're doing.
Well, right. Thank you very much. So when I took the job back in 2016, one of the things I said was, we're not going to do any layoffs. And boy, now is probably more important than ever. We've certainly protected the financial security of our 45,000. At the top of the list, though, is really protecting their health and safety. We of course, are focused on that every day when we operate, but even more so in today's world with this virus. So we're looking at what WHO, what CDC are all saying about trash, and what they've said is that trash is not a pathway to the virus. With that said, we're enforcing very strong protocols on, just as you've heard from everyone in terms of making sure your hands are clean. We've bought literally thousands of gallons of hand sanitizer that we're distributing out to our employees in the field. So we've done a lot on both the protection of their health and safety and the protection of their financial well-being.
You know, Jim, of course, sanitation workers are considered essential workers during this period, so they have to keep working. I don't know how much your company deals with medical waste in particular, but I know that some hospitals are asking for that waste, like masks and gowns and shields, to be incinerated at what they're calling an extra level of precaution, and that possibly workers are being exposed to pathogens. What is your take on that? And if you are dealing with this kind of waste, how are you handling it?
So we have a very, very small business there, and so we're handling it on very much a case-specific basis. It's really in just two very small locations, one in, I believe, in Nevada and one in California. So, and we're handling it as required there in those two locations.
You know, Jim, so you mentioned, or you are paying your workers 40-hour work weeks, even no matter if there are service disruptions. You know, as a leader, how long could that continue? You know, we're getting a lot of news now. A lot of those companies that were paying their workers early March are now furloughing them, notably in the retail sector. But how long do you plan to continue?
Yeah, it's the $64,000 question. But look what I've said, and I mentioned it, at the beginning of this call, which is since 16, I've said we're not going to do any layoffs, and so what we're doing is taking cost out of other parts of the organization. We've told our hourly employees that some of them may have gotten more than 40 hours a week previously under kind of the non coronavirus environment, and they are not necessarily guaranteed that they'll get those extra hours, but we are putting this 40-hour backstop behind them. What I didn't want was to have our employees worrying about how they were going to pay rent or put food on the table, and this really kind of lifts a huge weight off of their shoulders, so that they can do their jobs as well as they can, and it's obviously a vital service that they provide.
You know, can you bring us inside the business a little bit? I imagine with everybody working from home, the residential side of your business, is it booming? Has it picked up at all? What does it look like?
Well, there has been a shift in our volumes from commercial to residential. I wouldn't say there's more volume necessarily by number of homes. I mean, we have the same number of homes, but definitely the weights of each container have increased. So as people have moved and are now spending, 98% of their time at their homes, they're producing more trash and recyclables. By the way, recycling is still a very important business, not only for the environment, but for our customers, and we continue to recycle. So we're picking up both recyclables and trash, and those weights are just heavier now at homes than they were previously.
Jim, what about those small and mid-sized companies that are your clients who right now may have an issue with paying their bills? How are you dealing with them? Are you able to extend any kind of assistance to those customers?
Right. Well, it's a great question, because I think they may be at the greatest risk in all of this. And so we are, many of those customers do have contracts with us. We're allowing them to make changes to those contracts so that they can reduce service or even temporarily cancel service. And then one of the things that we're going to commit to coming out of this is that for our small customers, we're going to commit to a month of free service to help them get their feet back on the ground. And that's a big commitment from our standpoint. It's a big financial commitment, but I think it builds loyalty with those customers, and they appreciate the fact that we're not just there to start charging them again once they get their feet on the ground, that we're there to help them get their feet off the ground by giving them 3 months of service.
You know, Jim, too, where's all this trash going? We've talked to you in the past. It's not going into China any longer. I imagine trash is picking up in light of the coronavirus, but what countries does it go to? Because it's not like we're building landfills anymore.
Yeah, I mean, all of our trash is staying in North America. So we're strictly a North American company, and 100% of that trash is staying in North America. I think what you were referring to was that China was saying that there was a lot of trash in the recycle stream, and so therefore they were putting some quality controls on recyclers. I don't think anybody was actually shipping trash to China, but or at least not intentionally. But we're still putting our trash where it was going originally, which was into some of it goes into landfills, some of it goes into burn facilities. It's going into various facilities around North America that we continue to take it into, just as we did before the virus.
Okay, let's leave it there. Jim Fish, Waste Management CEO. Always good to speak with you. Thanks for taking a few minutes.
You bet. Thanks so much.
All right, straight ahead, we'll look at the plight of small businesses in the United States. Stick around. Welcome back to Yahoo Finance Live. You are seeing the market under a good bit of pressure today as worries about the coronavirus continue to ripple across Wall Street. I want to bring in Walter Steinman, thermoplastic tech of Thermoplastic Tech. Walter, thanks for taking a few minutes this morning. You guys are working on some pretty interesting technology. Walk us through it.
Thank you very much, Ryan. Yeah, we're a thermal company that manufactures packaging and for the cosmetic industry and the packaging industry. And we saw the need out there to retool our operation to manufacture the face shields. So we've retooled. We're in-house. We're in New Jersey. We're sourcing materials to be able to produce this for the industry.
So, Walter, I understand you've pivoted away from packaging for food companies and for beauty cosmetic type companies, and you've pivoted to making these shields. Who have you been able to contact? Who is saying, yes, we need these shields, bring them to us?
Yes, what we've had, and we've had the emergency management groups at different towns. The town of Elizabeth, Verona, New Jersey has gotten some of the shields. We've gotten some of the materials over to Mount Sinai. We're getting contacts from a number of health organizations contacting us and wanting materials.
So talk to us about how you were able to make these so quickly. Did you have all the supplies on hand? Where is your supply chain, and are you experiencing any hiccups along the way there?
Yes, Alexis. What we've had, as I said, we manufacture all kinds of thermoform in different film sizes in a lot of clear material. So we had a lot of this material on hand. What a lot of these face shields have an elastic band, and what we decided was to try to get as much material as we could manufactured in-house. We're vertically integrated, meaning that we can do the design, we can do the tooling, and we do the manufacturing and the package and assembling. So we decided to try to make all the components within house. We were looking around to see if we get other items such as the foams and things of that nature. And what has happened is the supply chain has gotten extremely tight. It seems that materials are hard to find. Scams are coming about. Pricing is getting really high for materials. And also, what we determined was, oh yeah, we have it delivery time 3 weeks, 4 weeks, and we're running into those situations. But what we've come into, we're making the band, making the shield, and we sourced a foam manufacturer in New Jersey that we had deliveries of 10,000 pieces just yesterday. We can pick them up. So yes.
Now, Walter, how hard is it, or how difficult is it to retool your plants to get out these shields?
Interesting, because we make our own tools. We can adjust as we go along. We had to determine the materials we could use. We also had to have an advice from medical say, yes, this is good, this is no good, this is the way it should be configured, because this is not our industry. We did it within a week, from the design to the decision to make the face shield to getting it in production. Was about a week.
Give us a feel for the sheer volume, Walter. How many shields did you make, yesterday? How many do you expect to be making by the end of this week? And do you expect to bring on more and new clients?
Yes. What we are capable of doing is about 25,000 pieces a day. We can make the shields on one machine, and we can make the strap on the other, and then we have the assembly line for putting the components together. We have those people in house to assemble other components for our clients. Yes, we're getting we're getting a lot of interest from different companies looking to see if they can get the face shields, and also we're getting some interest in takeout containers. We're still filling some of the orders from our customers too. Yeah.
Oh, I bet, because a lot of the restaurants now
restaurants are, yes, correct.
Yeah, you actually have one of those shields. For people who don't know what we're talking about, can you just show us really quickly?
Yeah, sure.
Are these the long shields?
This is the, see, we've got the face shield in the front. That's die cut on our thermoforming machines, okay? And then we had the strap, which we cut in another machine, okay? And then we put the foam in the insides of the component, so it just fits over your head, and that's how it goes.
Wow. All right.
And then we have one for making for the public, which is this type.
Oh, wow.
That we've put out for the public. It's a face shield, all PETG material, and it sits on your head. And the big thing what we're finding out that they're now saying is that that you have to have your hands away from your face, and this reminds the community to keep your hands out of your face, and it actually enhances the ability.
It certainly does. Very, very innovative stuff, Walter.
Yep. Okay. Well, Walter, I might need a couple of those, but really commend you guys for what you're doing here. Walter Steinman of Thermoplastic Tech. Thanks for taking a few minutes.
Thank you very much. Appreciate it.
I want to get right to Rick Newman, who continues to follow the race to the presidency. Rick, I almost forgot about this, but it's supposed to happen in November, and former Vice President Joe Biden is speaking out.
Yeah, he's still at it. He's got a TV studio in his basement, apparently, and he's doing some interviews. So somebody asked him, what's going to happen to the Democratic convention? Is this thing actually going to take place? And he said, I doubt it. And he's speaking the truth. I mean, look, the Olympics were canceled for right around the same time. You'd be cramming, 50,000 people into an arena and putting them in hotel rooms up in Milwaukee. And Biden said, I just don't think that's going to happen. So there are no procedures in the Democratic National Committee for what to do if you can't hold your convention. So they would actually have to develop those procedures, figure out how to do the voting remotely and things like that. But they are probably just going to have to do it, Brian.
What about Bernie Sanders, Rick? We haven't heard a lot about him, but he is still in this race, isn't he?
Yep, he's still in the race. And that actually complicates things a little bit with regard to what the Democrats might do regarding their convention. If Bernie Sanders were out of it and this were a cakewalk for Joe Biden, that would remove concerns about things such as what if you don't resolve the nominee, determine who the nominee is on the first vote. Then that's when you go to that second vote with the superdelegates, and it's a complicated process, but much easier to do in person than to do remotely. So with Bernie Sanders still in the race, I mean, and Joe Biden not having a lock on it, the Democrats might have to figure out not only how do we do, the first vote, but what if we don't actually come to a decision on the first vote? Then we have to figure out how to do the second vote. It just gets more complicated. Again, this is doable. But let's not forget how badly the Democrats screwed up the Iowa caucus with the technology problems there. So I think there probably are concerns. Let's not have another technology fiasco here.
Rick, is Joe Biden getting any closer to selecting his running mate?
Who knows? I mean, I would imagine my best guess, Brian, is he knows who he wants to ask. I mean, it's a fairly short list of candidates when you say it's going to be a woman, and it probably needs to be a prominent woman. So we know the short list. It's Kamala Harris, the senator from California. Could be Amy Klobuchar, the senator from Minnesota. That might make a little bit more sense because Minnesota a little bit more in play for Democrats than California is. And there are a couple others. It could be somebody we're not expecting. But the point of a convention is it's really political theater, and it gets it gets primetime TV coverage. So it's a lot of free publicity for the candidate, and if they don't have a convention, they're not going to get that free publicity. Usually there's a thing known as a convention bump, and once the convention is over, the nominee, who is freshly crowned at that point, gets a little rise in the polls. So I'm sure they have to figure out the process for having these votes, but they also have to figure out how to make up for the lost publicity they're going to get. So you'd want to have a big bang with, a flashy vice presidential nominee, but they, going to have to figure out a different way to do that too.
Hey, Rick, I know President Trump's approval rating has actually ticked up throughout this pandemic. Do you think at the end of the day that this is going to be a referendum on his presidency? And, is it looking more likely or less likely that he may win because of this?
Absolutely. It's going to be a referendum on Trump, and not so much on his presidency as how well he handles this coronavirus, the pandemic, and also the severe recession we're going to have. This could go in so many different ways, Alexis, as you and I have discussed on our podcast. But it really depends on whether Americans feel like Trump is competent and he is getting the nation through a really difficult time, or if he's kind of fumbling around and people really start to struggle and they don't feel like they're getting any help from Washington. So, voters go both ways on this. I mean, they kicked out Herbert Hoover in 1932. So they did change horses in midstream. So that old adage, you're in a crisis, you want to stick with the guy who brought you there. Maybe not so true. And one thing about that little bump in approval ratings that Trump got, that is puny compared to the bump in approval ratings we're seeing in Europe for Boris Johnson in the UK, for Emmanuel Macron in France, and Angela Merkel and Germany, even Justin Trudeau north of the border in Canada. They're all getting much bigger increases in their approval ratings than Trump is, in some cases double digits. And Trump's really is only 2 or 3 points at this point. So Americans are kind of not, sure what to make of it yet.
All right, Rick, I want you to wear that bow tie the next time we do a podcast, okay? I feel a little slighted, sure. I have to say. You mentioned our podcast. It's called Electionomics. So everybody, I know we have a little more time on our hands now at home. Be sure to check it out at Apple Podcasts or wherever you get your podcasts. Thanks a lot, Rick.
Thanks.
Yep, definitely my favorite bow tie from Rick. But let's get right to Inez, who's watching the markets. Inez, all yours.
Yeah, Brian, right now, just taking a look at the Dow that's down almost to 3%. You've also got the S&P that's down about 3% right now. And just pulling up the heat map right here to show you just what's happening with the Dow. You've got some of the components here on the Dow that are actually in the green: Intel, Walmart, P&G. But really, you're looking at JP Morgan Chase, Boeing that are losing the most. And just taking a look at some tickers as well, because we saw that some of the automakers earlier today, the automakers are down right now. Fiat Chrysler reporting its auto sales down for the quarter, down about 10% for the quarter. Also, I want to mention the ISM Manufacturing Index came out. It came out at 49.1 for March. That is a contraction. Anything under 50 is a contraction. Brian?
All right, Inez Ferre, thanks so much. And do stick around. More Yahoo Finance Live straight ahead.
$11 a.m. here in New York City. I'm Adam Shapiro. Welcome to Yahoo Finance. We are watching market sell-off. S&P 500, Dow, and NASDAQ are off their session lows. The Dow is down more than 500 points. The S&P 500 off more than 70 points. NASDAQ is off more than 160 points. Some of the headlines making news today: the ADP employment number. There was a cut of 27,000 jobs, but remember, this is measuring through March 12th, so it misses a whole half of the month in which the coronavirus crisis was becoming far worse. Expect the initial jobless claims tomorrow, those numbers to be perhaps even catastrophic. We had 3.3 million last week. You've got Diane Swank, the chief economist at Grant Thornton, saying they could be around 10 million. We're going to be talking about those initial claims for unemployment as we head towards Friday's jobs report. Also got some economic readings. ISM Manufacturing Index in March, 49.1. The estimate was for 44.5. Year over year, it was down about 7.6%. Also, the PMI, the ISM Manufacturing PMI, fell to 48.5. Year over year, it's down from 52.4, where it was at this point a year ago. Cases worldwide, 883,000 of the coronavirus in the United States. We're approaching 200,000, with more than 4,000 people dead. And finally, this is, on a brighter note, Census Day. It's time to fill out your census form if you have not done that. We're going to be talking about all of these issues with our panel. We've got Julie Hyman, we've got Julia LaRoche, we've got the whole team gathered, but we have to talk about the economic impact from coronavirus. Here is what President Trump said and why markets are selling off today.
It's absolutely critical for the American people to follow the guidelines for the next 30 days. It's a matter of life and death, frankly. It's a matter of life and death.
So the focus right now on how Washington is responding, preparing the whole country. Jess Smith is our correspondent in D.C. What's the latest, Jess?
Well, yesterday's briefing was very grim. It was a sobering briefing. You heard President Trump there saying that it's a life or death situation. The task force presented some charts, some modeling that showed the death projections of this virus. And those projections were really what guided the president's decision to extend those social distancing guidelines for another 30 days. And those projections said that even with the mitigation measures that the U.S. is taking right now, more 100,000 to 240,000 Americans could die at the end of this. Now, Dr. Fauci said that he hopes that is not the case, but the U.S. needs to brace for the fact that that could happen. And the president did seem to acknowledge just how bad this situation could get. Of course, he has said previously that the situation is under control. He floated the idea of opening up the country again by Easter, and he's likened this virus to the flu. But yesterday he said this is not the flu. He said it is vicious. And he said that Americans need to prepare for a rough 2 weeks ahead. Adam.
Jess, thank you. Let's bring in Emily Rowland. She is John Hancock Investment Management's co-chief investment strategist. And Emily, we appreciate your being here with us at Yahoo Finance. I had wanted to start this discussion with you to talk about what signals we're getting from the corporate, investment grade corporate bonds. But before we go there, got to ask you, this economic data we're getting still has not started to incorporate the worst of the coronavirus economic shutdown. So I can't imagine we've hit bottom yet, or have we? Because it's only going to get worse. Emily, I think you have to unmute. If we've got you on the phone, hit *6. Emily, there you go.
Yep, sorry about that. Yes, Adam, thanks for having me. I think we're all adjusting to all these new technologies, so pardon the delay there, but I do think that the data is going to get worse from here. It almost looks like a mistake when you read it, like somebody fat-fingered a spreadsheet. The charts look just unbelievable. Certainly initial jobless claims tomorrow. I've seen ranges from our economists anywhere from 800,000 to 3.5 million. I had not heard that higher figure until just now. But the data don't reflect all the damage yet. You mentioned PMIs for March. They sort of look a little bit better. The soft data looks a little bit better. But again, it's not reflecting the full extent of this. And one of the things that we're looking for in order to kind of pivot to a more risk-on approach to the markets is a bottoming in the economic data and in the number of COVID-19 cases in the U.S. And based on some of the rhetoric today, it sounds like we may be further away from that than we thought.
Hi, Emily. It's Julie here. I do want to ask you about what's being priced into the markets, not just the equity markets, but the corporate bond market, which I know you're watching as well. And, the old saw that the smart money is in the bond market. I don't know if that's true this time, but you say the corporate bond market is pricing in a worse scenario than our stocks. Which do you think is getting it more right?
Yeah, so when we look at the credit markets and we look at the spread of high yield bonds and the spread of investment grade corporate bonds versus treasuries, as many investors do, and we saw an environment a couple of weeks ago where investment grade corporate bonds were reaching the maximum levels of volatility they've ever been at historically. We saw spreads widen, getting closer and closer to 2008 type levels, and we just didn't think that type of spread widening was really warranted. We do think it's warranted on the high yield bond side. We will see defaults. We haven't seen them yet. And high yield bond spreads are elevated right now around 900 basis points. We got to over 1,000. We think there could be some further pain there as we do see those defaults. High yield bonds saw a decline of 40% in 2008. We've only gotten down to 20% this time only. So we could see some further pain there. Now we've got, on the investment grade side, we have the Fed coming in, supporting that market now that they've set up a facility to purchase corporate bonds, including securities of BBB quality and higher. That's another catalyst to, we think, embrace investment grade corporate bonds for that element of participation in this market.
Emily, I want to go back to something you said earlier, which is, investors are essentially looking for sort of the bottom of the coronavirus cases, the overall number not continuing to tick up in the way we have. But what we've also seen is that this really does, it depends from region to region. You look at a place like Washington State, they're starting to see their curve flatten because they are several weeks out of New York. And I'm wondering how investors should be looking at some of those trends. In other words, we're looking at the economy as a whole right now, but what we're learning is that the opening up of the economy could really differ from region to region.
Yeah, that's right. And I think really that's hard to handicap right now. And I think that that's also just one element to look at in terms of when you want to think about kind of repositioning portfolios for recovery. I mentioned the number of cases, also the economic data. We want to see investor sentiment get worse too. Remember that old emotional roller coaster of investing that we all grew up with? The best time to make money are where sentiment's at its worst, right? When everybody capitulates and investors are talking about despair. We are not seeing that. Even before this little mini bounce that we've seen in the markets, the advisors that I've been talking with have been looking every day of where can I put money to work? Where can I put money to work? I haven't seen investors kind of throw their hands up on this. So I'd like to see sentiment get a little bit more fully washed out here, in addition to those other catalysts that we're looking for in order to kind of reinvest.
It's Julia LaRoche here. I do want to go back to the corporate bond market just for a second. You're mentioning the Fed facility. This is something that we've talked about quite a bit on our air. I guess my question is, how do you think about where to put money to work within that market? And especially right now, I mean, presumably we could see some downgrades, some ratings downgrades that could possibly push some into that junk status. So how do you figure out within corporates where to be?
Well, I do think, active management is absolutely critical in this environment. I would definitely advocate for that. I would also, if you look under the hood in terms of the BBB market, especially, which is where all the ink has been spilled over the last couple of years in terms of risks, it's actually really highly rated companies that don't scream to me like poster children for default. So it's things like AT&T and Comcast and InBev and Verizon. So we actually think that the challenges within that space are more muted than a lot of investors think. Now, moving up to the high yield space, I think that's where you get more challenge. We're looking at potential defaults of somewhere around 10 or 12%. We really have not seen the worst of it yet. And we think that the high yield markets can be much more adversely impacted than investment grade corporates. And I would make one more point. One thing that we looked at was, with spreads at these levels, historically, what kind of returns do you get out of the investment grade corporate bond market? And right now we're around 300 basis points. It's come in a little bit, but you're looking at a 10 or 15% return 12 months out from here. So again, an attractive entry point right now in a market that's associated with a lot of risk.
And even with the Fed backstopping a lot of the, the credit markets, I've got to ask you, this is April 1st. Rent is due. We don't know the complete picture as to who will not be making rent payments, who's going to hold on to cash because they need to get at least to May. So are the markets perhaps underestimating the real slowdown that's taking place?
I think that's possible. You will see markets react. I mean, we've only heard these little anecdotal stories of the Cheesecake Factory and a couple of other companies that have said that they're not going to be able to make rent, but the next couple of days are going to give us more intelligence on that, and you're absolutely going to see more volatility. Isn't it amazing that the market's down 3% and we're like, remember when the markets cared about volatility? We're going to see a lot more of it.
All right. Emily Rowland is John Hancock Investment Management Co-Chief Investment Strategist. It's always good to see you. I look forward to when we're all back in studio and we can see you in person. Thank you for joining us.
Thank you.
Let's bring you some good news, and our fingers are crossed because the CEO and president of Cytodyne, Nadir Pourhassan, is joining us to talk about what could be a potential breakthrough medication to treat people who are having respiratory difficulty with COVID-19. Thank you for being here. You have an HIV drug that is doing what? Because we know you're in clinical trials for COVID patients. Nadir, I think you have to unmute yourself. If you're on the phone, hit *6.
Okay, can you hear me now?
Yes.
Perfect, perfect. Sorry about that. So our product, leronlimab, which was referred to as Pro-140 in past publication, has done very nicely in the clinical trial for HIV combination therapy. So the mechanism of action is it binds to CCR5. Now, people with COVID-19 die because of cytokine storm, which all have CCR5, same receptor that we bind to stop HIV. We have done over 840 patients with 0 serious adverse event attributed to the drug. So being a product that has hardly any toxicity or side effect, that was a very big start for us with the FDA when we said that our scientists believe we can stop cytokine storm, which that's the reason people die because of ARDS, acute respiratory distress syndrome. So when the doctor from New York believed in this product and they gave it to some patients, immediately he wanted to give to 2 extra patients. After the first 4, 2 of them extubated. One of the patients was alert immediately and extubated himself, got out of the ventilator, got out of ICU. Then he wanted to give to more patients. Immediately he gave to 4 more patients and then 2 more patients. So now we have 10 patients that are taking this. Now, the result of severe patients population for COVID-19 from China, one of the studies showed 31 deaths out of 32, 97%. So now we got 10 patients. These are anecdotal results. We communicated with the FDA. FDA was very good to us to immediately give us a phase 2 randomized trial for mild and moderate case of coronavirus. But now we just announced this morning that we're starting a phase 2B-3, which is, we believe it could be the final study for a severe population of COVID-19 patients. Now, this could be very, very interesting by coming Thursday or Friday, because we will now get results of the patients from day 0 and day 3. Already the results that we got from the first 4 patients, all 4 patients saw immunological benefit, which was a very strong result for us. Our doctor, Dr. Bruce Patterson, former Stanford professor, Stanford University professor, is very, very happy with the results.
Nader, this is Julie Hyman. Thank you for joining us. So we have seen the stock in your company just skyrocket because there has been, of course, a lot of desire on the part of investors to look for solutions to this issue. The stock's up today. It's had an incredible run this year thus far. But talk me through the financials of this. A company like Gilead, for example, which has much bigger scale, looking at some similar treatments. What's your ability to manufacture and monetize this product if indeed it gets through the clinical testing phases?
So not because of our HIV success, but because of our cancer patient success. As Fox News reported a few days ago, the oncologist on the Fox News said that I am a triple-negative breast cancer oncologist. This product has some very interesting results in oncology. My own mother-in-law has breast cancer and is taking this product right now, and she's alive because of it, in my opinion. Having said that, a year ago, we went to Samsung Biologics in South Korea, and we said we need tremendous amount of volume of this product to be produced. Samsung looked at our data room and says, wow, you guys really could get approved. The FDA had said that they didn't give us orphan drug designation because they thought we're going to sell to more than 200,000 patients. So Samsung deferred the payment for this little company that we are and allow the production go forward, thank God. Now we will be able to get tremendous amount of manufacturing product as needed starting April or May. We do have about 40,000 vials that we could make available. 30,000 is available now. 10,000 is being available shortly. And we are talking to our manufacturing in United States, which is in Seattle, AGC. They are working to do a 6th run, immediate run. We really believe that the 10 patients that we just injected, anecdotal results that would coming out very soon for all of them. The first 4 was spectacular, and we are planning to manufacture as much as we can. And we just closed on $15 million at 450 conversion rate when our stock is at 280. So people in finance community are believing that they need to get behind us, and we're getting quite a bit of offers of funding from different sources for our company.
That's wonderful news. But this is Anjali here. Looking at what Gilead has had to go through on their own HIV drug, with having to rescind that orphan status because of all the criticism about taking advantage of the situation financially, they might be able to sustain that type of manufacturing and production and sort of, in some degrees, donating, their drug out there. Are you able to sustain that, or what are your plans to avoid high costs of this product?
So the cost of the product is pretty low for us. This is a humanized monoclonal antibody. Gilead drug was antiviral drug, and they went compassionate use. They had the problems that they had. We gave to 10 patients, that's all. And we saw the result that we've seen so far, anecdotal. If we give the 75 patient, the same doctor in New York called us yesterday saying that this protocol, randomized trial, I would enroll in 1 week. They need this data. They need patients to be able to stay out of ventilator and be able to get off of ICU. If we enroll the patients with 75, that's 2-week trial. That's 75 times 250 doses. We have 40,000 vials. So we're going to finish that trial, randomized trial. We're not doing compassionate use. The compassionate use was for only the 10 patients.
Nadir, I just want to reiterate some of what you've said. First, is it a one-time inoculation or use of the drug per patient? And 2, in a best case scenario, when's the quickest you could have approval to start using this drug for people who have COVID-19? Again, best case scenario, quickest.
Last thing I want to do is guess what the FDA will do, but they have been great to give us a phase 2B-3 just as of today for a final approval, I believe. So hopefully we could see approval in 6 weeks or so if the results keep coming as fantastic as it is. That's my best guess.
And it's a one-time shot you need, or is it recurring?
2 weeks, 1 week, we give 1 shot and then another shot after that. Then 2 weeks, we see the efficacy within 14 days. We see efficacy, we're on to immediately go to FDA and talk about approval.
All right. Nadir Pourhassan is the CEO of Cytodyne. We wish you the best. The whole country is counting on you, more than just the country, and we wish you, again, the best with this. As we go to commercial break, I want you to take a look at what's happening with markets. We are in a sell-off, but we're off session lows. S&P 500, Dow, and NASDAQ all trading down. More Yahoo Finance right after this. Welcome back to Yahoo Finance. We're watching the market sell off. They are off session lows. One of the stocks trading down right now, Facebook. And our editor-in-chief, Andy Serwer, sat down with COO Sheryl Sandberg. They spoke about Facebook's responsibility to make sure what's being posted is accurate.
So we know what we need to do. We need to take our responsibility seriously for people to get the right information on Facebook. We want to keep providing our products across our platforms where people can connect. And then we want to support our partners. We want to support small business, support news organizations around the world. And we're going to keep doing that. I think we also have to realize how quickly this situation is evolving. If you had asked me 6 weeks ago or even 4 weeks ago, would we all be home? I don't know if I would have said yes, but here we are, right? I don't know when I would have said yes, but we don't know what will happen next. And that means we need to be really nimble. We need to be focused on keeping our services up and making sure people get the right information.
Akiko Fujita, what do you think? Is it lip service or is she legitimate here?
Adam, you know, it's interesting. I was thinking the other day that Facebook is starting to feel a lot like the early days, whether that was 2010 or 2011, where people are actually using the platform to connect in a way. And the cynic in me says, this is a company that sees a huge opportunity to turn their image around in this moment of crisis. Now, to their credit, they've certainly done a lot of things to help people out. They had this community help feature that they rolled out yesterday, allowing people to sort of connect with their neighbors and share information and help the elderly out. And they've also got this grant going for local news organizations that they announced earlier this week. But, you know, I'm not sure that really sort of puts aside all the controversies that came with Facebook prior to this on the issue of misinformation. Certainly the company's acted very quickly as it relates to the coronavirus, but they haven't done the same for, you know, sort of political campaigns. So it's going to be interesting to see how they use this as an opportunity on the other end. You know, are they going to act quicker? Are they going to see their image restored? And is this kind of an opportunity for them right now?
All right. I just want to remind everybody that you can see the full interview with Sheryl Sandberg, the COO at Facebook, on Andy Serwer's Influencers. It'll be here on yahoofinance.com at 5 p.m. tomorrow. We're going to take a break. Want to let you know the sell-off continues on Wall Street, but again, the indices are off their session lows. Welcome back to Yahoo Finance. As we take a look at what's happening with markets, just want to let you know the VIX is down a little bit. It's at 53. Again, a couple of weeks ago, we were in the 80s. As we turn our attention to coronavirus and how we protect people from that, we have to figure out how to protect seniors. And in-home senior care is a big issue. Home Instead Chief Executive Officer Jeff Huber joins us now to talk about that, because you're instructing your franchisees and the people who work for them globally how to do that. Tell us more about this, sir.
Yeah, thank you. It's good to be with you. You know, we've been on the front line of this for 25 years. Our average client is in their 80s. Most have multiple chronic conditions. About 2/3 have some form of dementia. So we serve a vulnerable population and always have. And so that's why, you know, following these CDC protocols have just been part of our standard operating procedure from day one. And so we're continuing those. We're reiterating those with our network. Before any caregiver goes into a client's home, they are instructed, mandatory training on all of those protocols. Last month, when all this was flaring up, I requested that all of our caregivers around the world be retrained on those protocols so they're front and center, top of mind for every caregiver before we enter our clients' homes, just to make sure that the safety, security of our clients is absolute paramount importance, and as well as those who care for them, our caregivers.
Jeff, it's Julie Hyman here. It's good to see you. If I'm not mistaken, we're talking about a lot of folks here, right? 90,000 caregivers around the globe who are going into seniors' homes who need care. What percentage of those folks are you seeing who are actually saying, I don't feel comfortable going to work right now? And then on the flip side, do you also have some clients, some of those seniors who are saying, no matter what precautions you're taking, I'm just not comfortable having someone come into my home right now?
Well, you know, we've, of course, the safety and security of our clients and our caregivers are paramount importance. So if someone's not feeling well, of course, we want them to stay home and take care of themselves. Actually, we're seeing an increase. Our services are so essential for our clients in order to stay at home, which we have been saying for the last 25 years is the safest place for them to be. So we're making sure that they are getting proper nutrition, they're hydrated, they have social interaction and engagement, they're ambulating, we're helping them with their toileting, bathing, and all those essential services. And so actually we're seeing, while there has been some drop off of clients, actually we're seeing overall an increase in the number of hours we're providing. We're also able to free up essential beds at hospitals. People coming home with less acute health issues are coming home, but they need services at home. And so we're providing an essential component and extension to the healthcare delivery system to free up capacity to make room for COVID patients.
Jeff, hi, it's Julie LaRoche. And I've seen this firsthand for folks, especially I had a friend in his late 90s and the home care was so essential so he could stay out of the hospital. I guess my question for you, based on his experience finding someone, are you all having issues when it comes to sourcing talent? It really seems like this is an area, it's a growing area that we've often talked about in terms of bringing folks on. How are you thinking about that challenge?
Yeah, so, you know, this is a growth industry and was long before COVID came along. And so there is a need for talent in this area. And I think as people are being displaced out of other industries, it's a great destination because not only for this current situation, but with the aging population, this is going to be a growth sector. So it's a great place for people to go.
So I have a team based all over the world. Everybody works from a home office.
Monday.com makes it really easy for them to collaborate as if they were in.
Well, I certainly would, if people want to give us feedback about the types of work that's being done that they don't believe is essential, I am more than happy to have that conversation with OPM and our contacts in the federal government. The essential work applies to them too. And just like we have we believe all of the work that local governments do is essential, but some of it can be done remotely. And that's what we would call on the feds to do and their contractors to do. Yes.
About the possible folks at the DOES calling out sick. Can you go back to that? I mean, are you seeing people calling out sick?
People are calling out sick, yes.
But in large numbers? And
yes, people are calling out sick across the government.
But are they calling out sick in large numbers in that department? And if so,
well,
how's it affecting?
It's relative. Okay, it's relative. This is kind of it's not a huge operation at DOES. And so any number of people calling out when you have had historic call volume is going to affect your ability to deal with those calls. Now, having said that, if every person was there every second of their tour, we would still be crushed by call volume. So we are examining ways to boost the number of people who can answer calls. That includes a couple of contracts, one implemented, one on the way, and we're developing some other ideas.
Questions about St. Elizabeth. So we heard that a number of patients have tested positive. So the question is, we heard that they were in the competency restoration unit where people go.
You have to speak up. I can't hear you.
Yeah, sure. So the patients at St. Elizabeth, we heard that some cases were in the competency restoration unit, where they go for psych treatment to see if they will be competent enough to stand trial. So my question is, can the city safely release any of those folks to decrease the St. Elizabeth population?
I can't speak to you with any detail about, let me see if I have the number of confirmed folks there. I think I still have a positive of 1 at St. Elizabeth's.
Follow-up question, if you don't mind, Mayor. We're hearing that the St. Elizabeth CEO reached out to DC officials asking for tests and hasn't been able to get them, hasn't been able to get anyone on the phone.
I'm sorry?
We're hearing that the St. Elizabeth CEO reached out to DC officials for tests and hasn't been able to get them, or hasn't been able to get anyone on the phone.
Well, the St. Elizabeth CEO works for DC government, and he has a chain, and I haven't heard that. Yes. Yes.
Any chance you're going to extend that again?
No.
Do you know how many have applied for short-term?
I think we're over 6,000. Over 6,000. Yes.
That's $25,000.
Up to.
Do you have enough money to cover that?
We have $25 million.
Is that enough?
As I said, the need will outpace the funding available. And so we don't know, none of those applications have been evaluated at this point, so the evaluation period will start after the application deadline.
Mayor Bowser, on the homeless population, can you tell us of the positive test cases, how many are homeless? And then I have a follow-up to that.
We have 5 confirmed positive cases and 49 people in the quarantine.
Now, my follow-up is about quarantine. Have you had to, or are you making plans to FD12 people, homeless people, to compel them to quarantine? I'm hearing that there are people at CCNB who may have been exposed who are refusing to quarantine. Are you considering, or has the city used FD12 to compel homeless people to quarantine?
I don't believe that we have, but it is certainly a tool at our disposal, which would be, as is the case every day, not something that any city official would want to engage.
So can I just ask about that? Does FD12 cover this?
I don't know the answer to that off the cuff, Mark. Can I ask our team to respond to that? We have our human services branch here who can respond to that. It's certainly a legal question that deserves a precise response. Yes.
I have 2 questions, just to make sure we're clear on the numbers. So 4 of the 11 people who died in the city have died at home. Clear on that?
I'm not, but I will get that confirmation for you.
Second question, there was a release from the DC Nurses Association. They said that Howard University Hospital, the nurse died from coronavirus last Friday. The nurse may live in Maryland or Virginia, and it may not be the district's official count. Dr. Nesbitt mentioned, medical personnel have died. Can you respond to that? I mean, they're saying a nurse that they know of died at Howard University Hospital.
I don't know that. If the nurse didn't live in the district, we wouldn't be able to confirm that. I couldn't. I don't.
Having to enact even more strict restrictions on movement and closures and stay-at-home orders than where we are right now, given that, as you said, we have not seen the peak of this yet. Have we seen the peak of restrictions?
We constantly evaluate adherence to our essential business and activity, and that's all I can say about that, Mark. That the only other change would be whether a business or location had to come off of the essential business or activity list.
Can I just ask you about a recreation question that
Sure.
I've been getting on social media? You talked about basketball and group activities like that. And you may have mentioned tennis, but can two people go out and play tennis right now, or is that?
I believe that we've cut off access to all of our parks and recreation facilities. Yes, sir.
Back to the DC Nurses Association again. Now they're saying that they're asking that DOA tests all healthcare personnel who've been exposed to patients or staff. The test be initiated immediately, and the results be sent out expeditiously. In response to that, as to whether the district is looking to test all hospital personnel who've been exposed to COVID-19.
Well, I think that all of the hospital providers are testing their personnel, and they have the ability, at least a few of them, to also not only take the specimens, but do the test on site. Okay. Thank you, everybody. Yeah, last question? Okay.
So I've got to ask you if you can elaborate a little bit in terms of what you meant when you told lawmakers on Monday that nobody wants us to clear out the jail for people who are serving sentences that they've earned. Let's keep that in mind. There's a large portion of folks, inmates in the jail are pre-trial stage, haven't been found guilty. So would you mind elaborating what you meant by that comment?
What I meant by it is that we have people in jail who have been sent there by a judge. And our responsibility is to make sure that everybody there is being treated fairly, constitutionally, and we're following all of our health protocols. And that's exactly what we're doing.
Are you releasing any of them early? I mean, the council gave you the ability to, I guess, increase good time. Is any of that happening? Has anybody gotten out of jail early because of the situation?
So out of the now 1,500 or so people at the DC jail, lower than what I said in prior days, there's about 80 people that there's any discretion at all on the part that good time credits apply for. These are what's called sentence misdemeanors. The legislation that the council passed about 2 weeks ago doubled the credits for essentially good time credits. Then that has, when it first was passed, dropped that population by about 20. Today, the first of the month they apply again, it'll drop by about 25 more. So we've seen an almost 50% decrease just in that population through the use of the good time credits. But I do want to give context that the mayor's point that there's sometimes an assumption that the city has authority to release people. People are in jail at the direction of a judge or the U.S. Marshal Service or the Bureau of Prisons. The sentence misdemeanors, for whom represent a small population, good time credits apply to, and we've seen a reduction there. And I'll highlight, as I have done before, that the thing that we control the most as a city is the policies and practices of our police department in trying to influence the inflow of people into the jail, and that has profoundly changed since the emergence of this pandemic.
Have you released anybody from the jail because of the policy since this started?
Yes, because the 80 or so sentence misdemeanors for whom good time credits apply, when it first passed, there were about 20 that got released just based on the passage. The first of the month, there's a new calculation of those credits. Today is the first of the month. About 25 more will be released today as the basis of the application of this credit. So DOC is following the law. It applies to a relatively small group, but they're applying it as aggressively as the law allows them to.
So 45 have been released.
Approximately 45 have been released.
Yes, this is the actual last question.
So, do you believe that when you're having conversations with the DC Council, either by phone conference or video conference, however you guys are getting together, that those conversations and meetings are comporting to the open meeting laws? And can press be allowed to listen in when you are on the phone with a forum of the DC Council as called for by the open meetings law?
Well, the council requested daily briefings for us, which we're happy to comply with, and we don't think that we have any violations of the opens meeting law, but I'm certainly happy.
Can the press listen in? Can we get that call-in number?
I don't have a problem with the press listening to anything. We report out every day. You probably asked me 15 questions in the last 30 minutes. So we're here to answer your questions. There will be occasions, and there may be occasions where we have to have a closed meeting, and then if that's the case, I typically would ask the chairman of the council for a closed meeting.
You would have to go through the procedures of the council voting, just like they would for any other.
He'll have to speak to what their rules are, but if there was an occasion that we needed a closed meeting, we would say so. And as is all of this press conference, the calls that we have with the community, and any briefing that we provide to the council, it is information that we know can be shared publicly. And if it is the case that we have to, as I mentioned, have a closed briefing with the council, I'll request that. Thank you.
And that was our update from Washington, D.C. The mayor there giving a coronavirus now update. We are continuing to bring you the very latest as it is happening worldwide here on News Now. Live look at the markets here, down nearly 700 points in the red as we continue to follow the latest news conferences from across the country as they are happening. Let's take a look at New York's Times Square. And this really just tells the story, doesn't it? Just how not only a city can shut down, but really a country, as thousands of cities look quite like this, bare. It's unnatural. I mean, it's going on noon there. 15 minutes till noon, and you only got a handful of people that you can count. No restaurants open there. Nothing. Wow, what a scene. Show you, while we do wait for other news conferences to pop up, let's show you the Texas governor from yesterday.
Texans, for your tremendous efforts that you've made over the past few weeks to slow the spread of the coronavirus. By staying at home, by reducing personal interactions, you are saving lives and you are improving the health of people across our entire state. Let me give you some updated information and then go into more detail. One thing that we continue to do, we continue to administer more tests to determine whether or not someone has COVID-19. As of noon today, 42,922 Texans have been tested for COVID-19. Of those tested, 266 have confirmed positive for COVID-19. Now there are 122 counties in the state of Texas that have at least one reported case of COVID-19. Very importantly, if you look at the number of people who are hospitalized, we still have only 2.4% of the hospital beds available in the state of Texas for COVID-19 patients are occupied, meaning that 97.6 of those available beds still remain vacant, available for anybody who may contract COVID-19. With heavy heart, I share with you that we have now lost 41 Texans to fatality connected with COVID-19. Importantly, as you look at the numbers that we're talking about, it still remains true that less than 10% of the people who were tested test positive for COVID-19, and just over 11% of those who test positive need to go to the hospital. Most of these numbers, very importantly, were the result of personal interactions of people in the state of Texas before the distancing practices that have gone into place the last couple of weeks. So it is one thing that is clear. When you look around your community, like I have here in Austin, or as I have seen either videos or photographs from so many different regions across the entire state of Texas, one thing that is clear, and that is distancing practices that you all are doing, they're working. There are fewer people out who can transmit the disease from one person to another. But, as President Trump said just 2 days ago, now is not the time for us to let up in these distancing efforts. Now is the time instead to redouble our efforts to make sure that we do more to rid ourselves of the coronavirus. 2 days ago, the president extended the nation's effort to stop the spread. He extended the deadline until April the 30th, and he reiterated the need for social distancing strategies that have proven to be effective. So, consistent with the guidelines offered by the president, by the CDC, and based upon advice by Dr. Hellerstadt of the Texas State Health Services Department here in Texas, as well as Dr. Birx and Dr. Fauci, who advised the president and the United States operation to combat the coronavirus, I am also modifying my previous executive order about social distancing protocols in Texas to further reduce the spread of COVID-19, to maximize the number of lives that we can save. I'm issuing Executive Order GA-14 that establishes, or that maximizes the number of lives we can save. I'm establishing essential services and activities protocols. In short, what this provides is that Texans are expected to limit personal interactions that can lead to the spread of COVID-19, while also still having the freedom to conduct daily activities such as going to a grocery store, so long as you are following the presidential standard of good distance practices. This decision that I'm announcing today is based upon data and based upon recommendations by state and federal healthcare authorities. The Essential Services and Activities Guidelines the Essential Services Guidelines are taken from the U.S. Department of Homeland Security guidance on the essential critical infrastructure workforce. The Essential Activity Guidelines are connected to the Essential Services Guidelines. The list of allowed services can be found at www.tdem.texas.gov/essential services. I'll repeat that, but you can find it online also. The list of allowed essential services can be found at www.tdem.texas.gov/essential services. Now, as I mentioned, essential activities are activities that the everyday Texan would be involved in. And the essential activities are kind of obvious based upon the essential services that are provided. But I want to give you some examples. Essential activities include any activity to access essential services like going to a grocery store, going to a bank, going to a gas station, getting supplies from a hardware store. Importantly, it includes maintaining physical activity, which is so important at this particular time. Activities like jogging or biking and hunting and fishing are permissible, so long as precautions are maintained to reduce the transmission of COVID-19 and to minimize in-person contact with others. Also importantly, religious activities may continue, but should either be conducted by remote services or, if conducted in person, should be consistent with the guidelines from the President and the CDC that describe appropriate social distancing to prevent the spread of COVID-19. An example of a type of service I've heard about that some churches are interested in having, especially at the time of Easter, would be what's called drive-up services, where a family unit would remain contained in a car that they drive in and would not expose themselves to others. That seems like it would satisfy the criteria that we're talking about. Importantly, all critical infrastructure will remain operational. Domestic travel is still allowed so long as it minimizes personal interaction. Governmental entities and businesses will continue providing essential services. Businesses not categorized as essential can continue to operate from home through the use of technology. This order will remain in place through April 30th, 2020. The order provides that schools will continue to remain closed until Monday, May the 4th, unless otherwise extended. As the coronavirus has spread across the land at a time when lives are literally at risk, Texans continue to rise to the occasion. The efforts of Texans across the entire state have slowed the spread of the coronavirus. But, as the President has made clear, we are not yet done with our response. We cannot forfeit the gains that we have already made by cutting short our task. We've come too far to falter now. We have made tremendous strides, but we have not yet reached our destination. We have more to do for Texas to reach its determined destiny. Together, we will persevere through this for another month. Together, we are going to heal our state. Together, we will ensure that the Lone Star State continues to shine. Now I'm going to pass it over to Lieutenant Governor Dan Patrick.
Thank you, Governor. A few weeks ago when we were in this room, I talked about 29 million Texans being really on the front line with our healthcare workers, our first responders, the folks that work in the grocery stores. But you're on the front lines, 29 million Texans. And because you follow the governor's orders and these guidelines over the last several weeks, per capita, if you look at the death rate in Texas, per capita of 29 million people, we're one of the lowest in the country. But we need to continue that for the rest of April and even be better at that so that we prayerfully and hopefully can keep our numbers low as all of us want. So as the governor said, follow these guidelines, be very smart in all of your travels when you leave home. If you do not have to leave home, do not do so. But this balance that we have struck in Texas and that the governor's led on has worked to date because 29 million Texans have taken it to heart, and we are standing and working together. And so please continue to do that.
Thank you. And now, Speaker Dennis Bonnen.
Thank you. I'll begin with a quote from Winston Churchill. He said, "It is not enough that we do our best. Sometimes we have to do what is requested." We're requesting Texans to continue to social distance, to continue to stay at home if you are not essential to the infrastructure of Texas. We're asking you to stick together like all of us and continue this process for 30 more days so that Texas can continue to be the leader in defeating COVID-19. Social distance, stay home if you're not essential. Go out and enjoy a walk, enjoy a jog, but be conscious of your friends and your neighbors, because we were all in this together. And the better we do this together, the sooner we will be out of this together. And I appreciate the governor's leadership in this executive order, and we support him in getting Texas to the other side of this effort. Thank you.
Thank you, Speaker. And now, Dr. Hellerstedt.
Thank you, Governor Abbott. The executive order that the governor has announced is based on very sound public health policies and principles, and this will only increase our ability to slow down the spread of COVID-19 throughout Texas, and that is absolutely the goal. When we look around, we see people are responding. We should have great confidence in that. We should feel a great sense of our own community pride because we are doing the things that we know are going to work, and we should have confidence in that. And I believe that over time we're going to be able to measure the fact that we've had an impact on the rate of spread of COVID-19 in our state, and that's what everybody wants. We want to stay safe, and the measures that are outlined in the executive order are absolutely intended to make that happen. Thank you, Governor.
Thank you, Doctor. And now Chief Nimkid.
Thank you, Governor. I'd like to reiterate the directions you've given to us, and one is to maintain the health and safety of Texans at the utmost priority. The second is to make sure that our healthcare workers and first responders have the necessary materials and supplies that they need. And the third is to ensure that our critical infrastructure safely stays up and running. The order today and the tools that we have give us that capability.
Thank you. And now the Commissioner for the Texas Education Agency, Mike Morath.
Thank you, Governor. Our system of public education in Texas serves 5.5 million souls, little bundles of energy trying to become the best versions of themselves. And like many parents in Texas, I'm a parent with 2 young children, and we are wrestling with a new reality. For the parents listening at home, we will work through this. We will get through this together. For a little bit more time, we all must remain apart so that we can come back together. Our educators all over the state of Texas, working with love and diligence, are doing everything in their power to support parents all over the state of Texas, and we will continue to do so for the duration of this executive order and beyond.
Thank you. And let me just close with this. I want to say something to each one of you. Every single one of our fellow Texans is important to our state. We care about your health. We want you to stay healthy. Please do everything you can over the next days throughout the remainder of April to make sure that you stay healthy, that when we come out of this cloud of uncertainty, of this time period when we are minimizing our contact, that you'll be healthy, your family will be intact, and that we will be reinvigorated once again as the premier state in the United States. With that, we'll take some questions. So would you repeat the last part of the question?
Yeah, with these now increased restrictions on businesses, essential services, and non-essential, would you classify now this as shelter-in-place or stay-at-home order or statewide in Texas?
Well, candidly, when people talk in terms of shelter-in-place, what shelter-in-place really means as a term of art would mean that wherever you may be at a particular time, you need to take shelter immediately right there. Whether you are at your home or some other location or in a roadside ditch, wherever you may be, you're supposed to take shelter because of something like a tornado would be coming. So shelter in place is not a good term to use for any of these strategies that have been articulated by anybody. Similarly, this is not a stay-at-home strategy. A stay-at-home strategy would mean that you have to stay at home. You cannot leave at home under any circumstances. That obviously is not what we've articulated here. This is a standard that's based upon essential services and essential activities. Those who are involved in essential services, as defined by the United States Homeland Security, will be able to continue to provide those essential services. Similarly, those who want to access those essential services like grocery stores or hardware stores or financial facilities have the ability to access them. In order to access them
on occasion, that may mean leaving your house, going to wherever it is you need to go. Similarly, as I indicated, personal health and physical activity are important always, but particularly at this point in time. Going for a jog, going biking, other forms of outdoor exercise are very important. However, doing so in groups would be potentially hazardous to your health. So we encourage people to continue to maintain active lifestyles, but do so in ways that maintain the distancing practices that have been articulated by the President, by CDC, and make sure that you are not exposing yourself to anybody who may have COVID-19.
How can you enforce an order like this?
It's enforced. What the executive order does, it empowers any law enforcement officer in the state of Texas to enforce it. It's enforceable by either a fine or jail up to 180 days. And once again, any law enforcement officer in the state of Texas can impose it. And I can say this, if this executive order is violated, Commissioner Hellerstedt already has issued his own executive order that exists such that anybody who violates this can be subject to a quarantine order.
You mentioned that right now we do have enough hospital beds for the patients that we're seeing. What about when it comes to PPE equipment? We have heard some stories that in Dallas people are being asked to, reuse that equipment, things like that.
First I will tell you that we're so proud of our fellow Texans for stepping up and offering things such as PPE, whether it be masks, whether it be gloves, whether it be gowns, or whatever the case may be. Also, I'm proud that a team that's working with Chief Dim Kidd has been doing a terrific job to access all channels to increase our supply of PPE and other items. And I'll let Chief Dim Kidd explain more about that.
Thank you, Governor. And we're hearing the same thing. It's a very valid question. There's no secret that the supply chain has taken quite a shock. But what we also, when the governor's been talking to hospital CEOs, they're on a rationing program right now so that they don't completely run out. Where in normal days it might be one mask to one provider per each patient, CDC guidelines and the things that we're asking all of our responders and healthcare workers to do is to, at best if possible, try to use one mask per one provider per one shift. Now, if the mask gets compromised or gets wet, we want to change that out. I can tell you on the front end, how we use it will help determine how much we have. On the back end, our team is working very hard at an international level to find the right personal protective equipment that's going to come in and be distributed in a very rational and bed count and population driven manner. We want the most need going to where the resource is needed so that we don't have any waste at this critical point in time and make sure that we don't have any shortages either. So we're working very hard around the clock to make that happen.
I'll add also that the governors have once or twice a week conference calls with the President, the Vice President, Dr. Birx, sometimes Dr. Fauci, who was on the phone call yesterday. And the point was made yesterday by both the President and the Vice President about the additional investments made for additional supplies that are coming. And so they are constantly, they at the federal level, are constantly working on increasing supplies. And we are anticipating far greater supplies coming forward, just like what we've seen with regard to the massive percentage increase in the number of tests that have been administered.
We've seen on a local level, even with stay-at-home orders, on businesses, that there are kind of differences between counties. So with this kind of being statewide now, determinations of essential services, when questions arise maybe for businesses, if they're not kind of following those central categories or those kind of gray areas, they have to kind of go through the state then to get clarity on whether they're essential to remain open or.
So this executive order has some specific paragraphs talking about what it does and what it does not do to override local ordinances or county rules. To the extent that any county or local jurisdiction has any rule that's inconsistent with this executive order, it is overridden in this executive order. And so to the extent, for example, that religious services are permitted as specified in this executive order, they cannot be denied by a local ordinance or local order. However, to the extent that there are things that are not mentioned in this executive order, it still gives local jurisdictions the latitude to establish their own rules. Yeah, to the extent that it's not overridden by this executive order, local jurisdictions do still have the flexibility to impose standards that they may consider to be more strict.
Reports today say that the CDC is considering telling the public to wear face coverings. Is that under consideration in Texas?
Would you repeat the first part of the question again?
Yeah. So the CDC is now considering telling the public to wear face coverings, like masks, things like that. Is that something that's under consideration in Texas?
So what I will consider is any order or any type of item that is offered up by the CDC as a possible standard to consider will be something we will consider. My prior executive order was based upon CDC-based standards. This current executive order is largely based upon CDC standards as well as some other federal standards. And we want to stay connected to the standards that are established by the federal government. And we will look into any standards that are established by the CDC for consideration.
There have been reports that some local officials may have not received the same data the state has in terms of hospital capacity and things like that. They've kind of issued their own kind of local requirements and to have that reported to them locally on a daily basis. Is there plans for that kind of data, possible capacity that the state's able to share that with local officials to collaborate on that response for healthcare facilities locally? Or?
We want to achieve the highest level possible of collaboration and sharing of information, and we know that's a two-way street. And so we've been mandated or required by the federal government to impose information gathering standards for the local governments to provide certain information to the state health services for us to be able to in turn provide to the CDC. On top of that, I could understand what I'm hearing from you. There may be needs or desires from local governments to get access to certain information that we have. To the extent that's possible, to the extent we can create information channels to accomplish that goal, I think we should do it. And so one thing that all of us do, it could be Dr. Hellerstedt, it could be Nim Kidd, it could be Mike Morath, or it could be any of us. We are constantly visiting with local officials to try to provide them either the resources that they need or the information they need. And we want to maximize that to the extent possible.
With this executive order now extending school closures through early May, does that also apply to your earlier restrictions on dining in restaurants? Will those also all be convicted?
Yeah, absolutely. So contained in this executive order is the extension of the prohibitions of certain types of businesses from operating altogether. Bars and restaurants, however, want to clarify, we strongly encourage people to utilize restaurants for food, whether it be for pickup or delivery or otherwise. And then we have also outlined some additional businesses in here to make sure that everyone understands they are closed. I'll list what it says here, and that is that people shall avoid eating or drinking at bars, restaurants, and food courts, or visiting gyms, massage establishments, tattoo studios, piercing studios, or cosmetology salons, provided, however, that the use of drive-through pickup or delivery options for food and drink is allowed and highly encouraged throughout the limited duration of this executive order.
Are you at all concerned kind of with the spread in these facilities across Texas? And can you share any more details on exactly what tests have been done and plans you have for state?
Right. First, I will tell you, as we also list in here, we emphasize the importance of making sure whether they be state-supported living facilities or senior living facilities, and we have several different categories in here. I would.
All right, folks, we're going to go to a live event as they pop up here. We're going to go out to the city of Houston as we are getting a live news conference there.
Now, let me employ every Houstonian and every person within this, that's listening to me today. If you will go online, it takes about 2 to 3 minutes and you're done. 2 to 3 minutes. I think it's about 9 questions. You simply fill that out, and it's our obligation to be able to count every single person. We just need to know that. So please fill out the census. Having said that, Today at City Council, we pulled $5 million from our Economic Stabilization Fund to set up a special COVID-19 account. That's very, very important. Today on City Council, I want to thank the members of City Council today. In fact, I'm standing here with Councilmember Edward Pollard. I want to thank the members of City Council for agreeing to lease 2 hotels, 186 rooms for those 2 hotels to be used as quarantine space. It is a 3-month lease agreement. And then there's a 3rd hotel that is also currently being used, and we'll solidify that agreement next week. That is being used now in the downtown area, and it's being used primarily right now by firefighters and police officers. All of these hotels will have the same sort of lease agreement. We'll be paying the same, and if additional hotel space is needed, then we'll enter into additional agreements for the same lease terms. The additional inventory will allow the city to house not only first responders, but also municipal workers and homeless individuals as well. And then we'll segregate them, because one person was asking, are we mixing the 2? No, today was 2 hotels. We can use one for, let's say, for our homeless population, one for first responders, other municipal employees that need to be quarantined. And then this is a collaborative agreement with the Harris County, and we are leasing the facilities. Harris County will be responsible for providing the ancillary services, food, medical care, treatment, security for these 2 hotels. And I think they have already approved part of the measures that's needed on that. So I want to thank the county for work where we're working with one another. So these facilities can also be used by Harris County as well. If someone is waiting on test results or tested positive, and if they have nowhere else to go, they can use these rooms. And the room cost is about $200 daily, which is when you factor in all of the cost, meals, security, and we believe all of this will be FEMA reimbursable. Let me also say, and we've gotten raised some concerns about people, for example, in many of our parks, playing basketball and things of that nature, drawing big crowds. And we're taking steps to alleviate that, because the whole notion now, we're continuing to be on the order for the next 30 days until April the 30th, and social distancing is very important. And it's one thing to play tennis, you cross the net. But in regards to basketball, that is a physical contact sport. And so on Monday, I ordered the Houston Parks and Recreation Department to remove basketball rims and goals to help better enforce social distancing. Hated to do it, but health first. And what you will see if you look at the numbers, the population that's coming back testing positively is that age group between 20 and 60. And a lot of it is, in their 20s and 30s, so to speak. Not to say that older guys like me don't play, but we can't get up there and dunk as much. And so we are removing the rim and goals, leveling the playing field, so to speak. But it is being done to keep people healthy and safe, okay? That's the reason why we are doing it. And there are 492 goals located throughout 142 parks. And yesterday the team removed or secured 89, and we'll be working to secure the others as well. In addition, 1,200 signs have been deployed throughout the parks system, 800 in English and 400 in Spanish. And the park monitors will begin daily rotations to assist in reminding constituents to observe all posted rules and practice social distancing. The parks remain open, but if they become so crowded or where people are not engaging in social distancing, then we will be monitoring that situation, and we reserve the right to tell people to move on, and we reserve the right to simply temporarily close those parks. We did one over the weekend, where there's so many people in the park, could not engage in social distancing, and so we told people, you're just going to have to disperse. So let me just ask people, as you go to the parks, if you see that the parks are already just full, crowded, go to another one. There are other parks. Or feel free, you can still walk within your neighborhood. You can do that. Last week, the parks team distributed 6,000 prepackaged meals at 50 park sites, curb sites, and Monday and Tuesday of this week, the team has distributed 3,000 prepackaged meals, and daily monitoring and social distancing is also occurring. And to the extent we need to do more, we will do just that. And then let me just say, the numbers, we're doing more testing. The second Houston testing site is now up and running with a maximum of 250 tests per site. And then that there's other testing that's taking place in the city of Houston with other either nonprofits or private medical services that's been provided. Testing is very important and to give us some sense of what's taking place in the city of Houston. And so let me just say, as of this morning, the number is 377. With more testing being done, the numbers are going to go up. So let me just say that. The numbers are going to go up. And then because the testing has been done by different units, different components, as we gather that information and feed it into our system, and then when it comes time to post those numbers, the numbers, you could go from 377 to 450. Let me just use that. You can go from 377 to 450 because all of the numbers are coming in because there are different groups that are doing testing. Harris County, City of Houston, we're doing testing, but Legacy and other hospitals are doing testing. They're sending their testings through LabQuest and what's the other one? LabCorp and Quest. And those numbers are going up to FEMA, for example, or CDC. And then we don't know whether or not there's a backlog in their reporting. And so by the time those numbers come back to us, the numbers can go up. But I do want to underscore this. What we are doing in the city of Houston, in Harris County, in our region, what we are doing is working. So let me just say that. I know people are making huge sacrifice. But I want you to know that what we are doing with the stay home, work safe, social distancing, washing your hands, using sanitizer, spacing yourself out, those practices are working. And when you look at other cities, whether it is other states, whether it's in Louisiana, New Orleans, for example, New York City, California, LA, Washington, when you look at other cities, and where we are today, we have taken significant steps in order to flatten the curve. And that's the goal, to flatten the curve such that our healthcare delivery system is not overwhelmed. As Dr. Peter Hotez from Baylor College of Medicine said on yesterday, he anticipates the peak for Texas to be right around May the 2nd. So let's continue to work together collectively, and we can get it done. And then this is April 1st. I'm asking landlords and tenants to work together, okay? Please, 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 don't be throwing people out. This is not the right time to do that. So let the landlords, my hope is the landlords and tenants will work together. And then the grocery retailers wanted me to remind everyone there's no question, there's no problem with the food supply chain. So this is the first. A lot of people are getting, checks and other things in the mail. You don't feel like you don't have to just go and rush and buy everything. So please don't do that. Buy what you need and then be respectful of others who have to do the same. So if you do that and engage in social distancing while you're in the stores. Let me stop there. And Dr. Peirce, anything you would like to add? Or do you want to?
Thank you, Mayor. So there's a couple of things. One is that the Mayor touched on, which I think is important about the numbers, is that we would like for it to be a nice, steady, predictable change. And that's not going to happen, unfortunately, because, as you pointed out, so some of the commercial labs, the federal government, for example.
All right, folks, we are now going to go live out to New York, where Andrew Cuomo, governor there, is speaking.
Let me give you an update on where we are. I think everybody knows everyone. To my far right, Dr. James Malachis. To my right, Dr. Howard Zucker, Melissa DeRosa, Secretary to the Governor, Robert Mujica, Budget Director, Numbers Maven Extraordinaire. Overall, the numbers continue to go up. We're still on our way up the mountain. The number of testing has increased. I'm very proud of this. more you test, the more negative, more positives. I understand that, but the more you test, the more good you're doing. The number of tested is up 15,000, 220,000 total people now tested. Positive cases are up to 7,900. Total cases, 83,712. Down to one county that now doesn't have a COVID case. That's what you're going to see going all across the nation. Well, we're a rural area. We're not going to get it. Oh, really? Go visit upstate New York if you want to talk about rural areas. We have rural areas, and just the way it's gone through rural New York, it will go through rural America. Total numbers, 83,000 tested positive, 12,000 people currently hospitalized. That's up 1,200 people, 3,000 people in ICU, 6,000 patients discharged. That's up 1,167. People go into the hospital, they get better, they leave the hospital. Most impacted states, New York is at 83,000. New Jersey is at 18,000. That's Governor Phil Murphy, who's been a great partner to me, a great partner to the people of this state. Governor Ned Lamont, also in Connecticut, has been a great partner. We've done a lot of great work as a region, which is very unusual. You know, those lines between states often become walls, not with Governor Murphy and not with Governor Lamont. We're working together, and we're going to work cooperatively with New Jersey because they have a real problem. California's ticking up. Michigan's ticking up. Florida is even ticking up. Massachusetts, but no one is anywhere near where we are, right? 83,000 compared to 18. Number of deaths, 1,900, up from 1,550. That number will continue to go up. That is people who have been on ventilators for a period of time. If you go on a ventilator, there's roughly only a 20% chance that you will come off the ventilator. The longer you're on the ventilator, the lower the chance you come off. We're still looking for a curve. We're still looking to see where we hit the plateau. Total number of new hospitalized. Again, you see the number goes up and down, but the overall trajectory of the number is up. Change in ICU admissions, bounce here, bounce there, but the overall number is still up. Change in intubations, same thing. The line is basically a line that is going up. Change in number of discharged, line is going up. Why? More people going in, more people treated, more people coming out. Everyone asks the same questions, and they're all good questions. When is this going to be over? What happens? How does it end? And people want answers. I understand people want answers. I want answers. But the answer is nobody knows for sure. Anyone who goes on cable TV and says, or network TV and says, this is what is going to happen, it's not true. Nobody knows what's going to happen. And I understand the need for closure, the need for control. We're at a place we've never been before. We're out of control. I need to know. I need to know. Nobody can tell you. What you do know are facts. And, you know, facts are funny things. What you're now getting are subjective facts. People who are optimists want to interpret it one way. People who are pessimists want to interpret the other way. People who bring their own subjective agenda tend to interpret the numbers a different way. For me, facts are facts. And the facts that we offer the people of this state and the people of this country, they're not pessimistic facts or optimistic facts. They're not interpreted facts. They are just the best information we have as of this time. And I think that is empowering and in some ways relaxing. As I've mentioned to you who've worked with me, I say to my team all the time, I don't I'm interested in your opinion, but I'm interested in your opinion second. I'm interested in the facts first. And give me the facts unjaded by your opinion. Because once a person has an opinion, or once a person wants a certain outcome, and they look at the facts through that filter, then you can interpret facts differently. Just give me the straight facts. Sergeant Joe Friday, just the facts, ma'am, just the facts. No opinion. There's something empowering to that. We look for the facts to projection models. That's how we gauge what we do. We follow the projection model. Every day you get additional data, they run that data into the model, and they refine the model. And basically, we then have a composite model, because you have many different people out there with many different models. We use McKinsey, which is a consultant to the state, for this purpose, to basically look at all the models and come up with a composite model. And if people wonder, well, where do you get these numbers, Governor? How do you decide what you're going to do? We have a model, we have a projection, and that's what we follow. The current model, and the model, by the way, even more maddening, the model changes the more data that comes in, because they started with assumptions and presumptions, and then the more data that comes in either affirms or discounts their presumptions that they started with. So they refine the model over time, and the model changes and the numbers change. But what we're looking at now is the apex, top of the curve, roughly at the end of April, which means another month of this. The apex, the recent number is you could need 110,000 COVID beds. What does that mean? Beds for COVID people, as opposed to other people who are in the hospitals for other reasons. 37,000 ventilators. That is our current model. That model is based on minimum or minimal impact from social distancing. Meaning what? One of the great variables is how effective is the social distancing? Are people doing it? Are they complying with it? And to what extent, and how effective is it? Nobody knows that answer. So they do different projections depending on how well social distancing works, how well people comply with it, and then how effective it is. Minimal social distancing impact is where we get the 110,000, 37,000 ventilators. High compliance with social distancing, you still have 75,000 COVID beds as opposed to 110, you're 25,000 ventilators, okay? So when I keep pushing for high compliance on social distancing, it's because high compliance on social distancing will reduce the number. This is what they began talking about, flatten the curve, flatten the curve, flatten the curve with social distancing. This says, this is the difference between high compliance with social distancing and less compliance. If you have high compliance, you're down to 75,000 COVID beds, 25,000 ventilators. Less, it goes up to 110 and 37. Interestingly, both are looking at the same point of apex. It's just a lower apex. Both models say you apex at the end of April, just lower, a lower need at that apex. And that is what we want, because this all comes down to, at the apex, can your hospital system manage the volume of people coming into the hospital system? That's all this is about at the final analysis. Now, there are also different models out there based on different presumptions. People studied China, people studied Wuhan. Well, if you have the same compliance that you had in Wuhan, Wuhan basically just locked up society. I don't even know that if the federal government enacted the Wuhan model that the American people would comply. We have a totally different social structure, governmental structure. So you have different models that project higher or lower. What we're doing with McKinsey is studying all of them and coming up with a moderate model that is a basis for us to make planning decisions, because I have to make decisions. And I want to make the decisions off the numbers, so that's what we're doing. It's not to say that there aren't other people with other opinions. There are many people with many opinions. And some have the apex happening sooner. Some have the apex happening later. You can find people who believe the apex will come in 7 days. You can have people who say the apex won't come for 6 weeks. You have that kind of range. You have a broad range on the number of beds. You have a broad range on the number of ventilators. Our course, for planning purposes, is a moderate model, because in truth, the higher models, we don't even have a chance at meeting that capacity anyway. You say over 110,000 beds. There is no possible way we could get there. So in some ways, an overly aggressive estimate doesn't even mean anything to us, because it's just unachievable. People ask, well, what's going to happen? And Dr. Fauci said yesterday or the day before, the days blend together, estimated 100,000 Americans may pass away. Some people have said 100 to 200,000 Americans may pass away before this is over. When is it over? When you achieve what they call herd immunity. How do you say 100 to 200? That's a broad range. Well, it goes back to the other point. Nobody really knows. But 100 to 200, you're saying a significant amount of people lose their lives. There is a group that is funded by the Gates Foundation, thank you very much, Bill Gates, that projects 93,000 Americans will lose their life by the time this is over. That model suggests 16,000 New Yorkers will pass away by the time this runs its course. My guess is, so when Dr. Fauci says 100,000, there are models out there that make these types of projections. And what would that mean to New York? That would mean about 16,000. Frankly, that would mean that New York is only 16% roughly of the number of deaths. I don't even understand that, since New York is so much higher right now. But what that does say to the rest of the nation is, this is not just New York. If you believe these numbers, 16,000 deaths in New York, that means you're going to have tens of thousands of deaths outside of New York. So to the extent people watch their nightly news in Kansas and say, well, this is a New York problem, that's not what these numbers say. It says it's a New York problem today. Tomorrow, it's a Kansas problem and a Texas problem and a New Mexico problem. That's why I say to my fellow governors and elected officials all across this country, look at us today, see yourself tomorrow. And let's address it in New York, and let's cooperate to address it in New York, because it's going to be in your town tomorrow, metaphorically. And if we learn how to do it right here, or learn how to do it the best we can, because there is no right, it's only the best we can, then we can work cooperatively all across this country. The other thing this model says, people say, well, when is it over? 2 weeks, 3 weeks, 4 weeks? this model projects you're going to have a high death rate through July. If this model is correct, this could go through the summer. Now, other people talk about getting back to work, starting the economy, April, May, June. This model says it could go on through July. Now the questions become nuanced. Well, could you still be dealing with the virus and get the economy up and running and get people out of their homes? Yes, I think there are ways to do both. Not picking between human life and the dollar bill, because no one is going to pick a dollar bill over human life. But can you come up with a public health strategy that is consistent with people getting out of their homes and starting to get back to work? Yes, you can. My opinion is the best way to do that is to come up with a rapid testing procedure where people can test, they know who's positive, they know who's negative, and they know who can go back to work and come up with a test quickly, and they're starting, that is readily available, that people can do at home, so you can take the test, know where you are, and we can start ending this terrible situation that we're in. Also, you come up with testing and rapid testing. Not only do you get up and get the economy running, you end the anxiety. The anxiety is what is most oppressive here. Not knowing if I'm positive, if my friend is positive, if my loved one is positive, not knowing when this is going to end. The anxiety of dealing with this isolation day after day after day. It's like a bad Groundhog movie, you know? Day after day after day. When does it end? How does it end? I don't know. I'm out of control. I think that testing is going to be the best mechanism to try to work through that. On the good news front, we have new testing available in New York. Regeneron, which is a great New York company, has created 500,000 testing kits at no charge. Thank you, Regeneron. And they are distributing them across the state. Corning, another great company, has donated 100,000 tubes and $500,000 at reduced cost, so we can do more tests. New York is very aggressive on testing. We have been from day one, and we think that has helped us slow the spread of this virus. My favorite topic, young people must get this message, and they still have not gotten the message. You still see too many situations with too much density by young people. They can get it. They're putting their lives at risk. This can kill young people, rare circumstances, but it can. But you get infected, you give it to someone else. So think about somebody else. And I've said this 100 different ways. The compliance is still not where it should be. You saw the models on the differential in the compliance versus major compliance and minor compliance. So we're going to take more dramatic actions. We are going to close down the New York City playgrounds. I've talked about this for weeks. I warned people that if they didn't stop the density and the games in the playgrounds, you can't play basketball. You can't come in contact with each other. That we would close the playgrounds. I've spoken to Speaker Johnson from New York City, who feels very strongly about this, who did from day one. We agreed initially with the mayor that we would try compliance, and the mayor was going to try to use the NYPD to enforce compliance, social distancing in playgrounds. It is still a problem. We're working with the speaker, we're working with the mayor, but we're going to close down the city playgrounds and leave the open spaces available. So use the open space in a park, walk around, get some sun, great. No density, no basketball games, no close contact, no violation of social distancing, period. That's the rule. Other good news, we are working with all the hospitals in the state to do something they have never done before, which is to act as one, to cooperate, to share supplies, share staff, support one another, shift patients among hospitals, which really has never happened to any great extent. And the hospitals have been very cooperative, and I want to thank them very much. In this war, we must plan forward for the next battle, meaning we have been behind from day one. This virus has been ahead of us from day one. You don't win a war that way. The next battle is the apex. The next battle is on the top of the mountain. You see that curve? You see a curve? I see a mountain. The next battle will happen at the top of that mountain. That's where it is going to be joined. And that's where the enemy either overwhelms our healthcare system or we are able to handle the onslaught of the enemy at the top of that mountain. And that's what we're planning for every day. But I want to offer you a different perspective that I'm starting to think about, and I think we all should start to think about. As a society, beyond just this immediate situation, we should start looking forward to understand how this experience is going to change us, or how it should change us, because this is going to be transformative. It is going to be transformative on a personal basis, on a social basis, on a systems basis. We're never going to be the same again. We're not going to forget what happened here. The fear that we have, the anxiety that we have, that's not just going to go away.